Welcome to this edition of How to Access Finance Live. And it's a very nice time we're going to have today. We have a lineup of experienced speakers who are going to talk to the issue of how and where to find affordable finance. So I'm going to introduce our first speaker for today, but he's not there. Where is he? I'm going to introduce our first speaker for today in the person of Mr. Uche Nwachukwu. And his CV is very, very exhaustive. So while we wait for Mr. Uche Nwachukwu to come back online, let me read his bio to you. Mr. Uche Nwachukwu is passionate about international development, public health in developing countries. Oh, I don't know whether they'll hear me. And disaster risk management. In vulnerable communities. He has key skills and expertise in strategy, project management, operational process optimization, monitoring and evaluation. He's also an expert in health policy financing, development financing, finance and consulting, strategy consulting, and he has previously worked for the United Nations, the Federal Ministry of Finance, Health Systems Consult Limited, KPMG Nigeria, among many others. He is currently the Lagos State Manager for the Bank of Industry. Mr. Uche Nwachukwu has a doctorate in business administration, a master's in public health, a master's in development studies, a master's in business administration, and a master's in pharmacology. You can agree with me that Mr. Uche Nwachukwu has a very powerful CV indeed. And it's going to be our great pleasure to welcome him to this live stream and ask him some questions. Some of the questions will be from the audience. Some of them will be from us, and others will be things that people have asked us to ask on their behalf. While we wait for Mr. Nwachukwu to join us, let us take a few more minutes to go over some parts of his CV that I didn't mention before, because his CV is so extensive that it will take a whole day if I decide to start telling you all about him. So now Mr. Uche Nwachukwu is around. Let me bring him on stage. Welcome, Mr. Uche Nwachukwu. Thank you so much for joining us today. It's our great pleasure and honor to have you on this program.
Thank you so much. It's my pleasure to be here. Apologies for the internet obstruction that I've been experiencing, but I hope this is a more stable connection now.
Not at all. Technology is like that. So one of the questions we have for you today came from our audience. This gentleman is asking, why is it that banks in Nigeria do not give loans to creative entrepreneurs? Could you tell the audience about BUI products and services and the sectors they target? Because this gentleman clearly does not know what BUI has on offer.
Yeah, well, we do give to creative industries. In fact, we have a particular department in BUI called the creative industries sector. What happens is that at BUI, we are almost fully integrated. We give to almost every type of customer. So we have three major directorates: micro enterprise directorate, SME directorate, and large enterprise directorate. So it doesn't matter the amount of money you're looking for, it is likely you'll find a directorate that will attend to you. Now, when it comes to creative industries, we have funded quite a lot of players in the industry. Like I said earlier, we have a unit called the Creative Industries Group. Now, depending on if the sector you're playing on in the creative industry, like let's say filmmaking or fashion or whatever it is, if it's if you are looking for funds in excess of 1 billion, you'll be attended to by our large enterprise group. If you are looking for anything below 1 billion, let's say between 10 million and 100 million, obviously the state office will be able to attend to you. And if you are looking for anything below 10 million, we have the micro enterprises group that will attend to you. So we are trying to promote the creative sector in Nigeria. We have units specifically designed to attend to these groups, and it's one of the more popular facilities we offer at BOI.
It looks like there's a little bit of a technology issue again.
Okay, can you hear me now?
Yes, I can hear you now, Mr. Uche. You are telling us about the creative sector.
Yes, I said that it depends on the amount of financing that the customer is looking for. We have different groups, with the micro enterprise group, the SME, or the large enterprise, that we're able to offer facility to the customer. But the creative industry sector is one of the major sectors at BOI. We have funded quite a few customers in this sector already.
Thank you very much. Just like this gentleman is not aware that we have creative sector loans in the Bank of Industry, there may be many other people out there who do not know about the various products and services that BUI offers. What other sectors do you target? What other intervention funds do you have? Maybe you could tell us a bit more about BUI products and services generally.
Okay, generally from the name Bank of Industry, BOI is focused on driving and promoting industrialization related activities in Nigeria. And because of this, we have quite a very broad spectrum of customers that we attend to, ranging from uh, oil and gas, creative industry, we have the healthcare sector, solar energy, agro processing, pretty much anything you want to do. Once it comes down to you being in production, manufacturing, processing, where you need asset financing as well as working capital to be able to enable your business. Even if you are dealing in trade, which for the most part that does not necessarily fall under the purview of what BOI does, but we still have the micro enterprise group that handles some of those loans like the trader money, the market money, the Brave Women project, and all that. So, depending on the industry you particularly play in, if it is not direct trade, it is likely that BOI will have a facility to be able to attend to you. And luckily, we also have what we call the matching and managed funds, whereby state governments or private individuals like Dangote, they provide money and say basically we want you to give this at 0 to 5% interest rates to people that play in this particular sector. And we also have those facilities. So if you go to BOI website, which is boi.ng, you see a full bouquet of all the industries we play at and all our funds, and you should be able to find out which one that is specific to your sector.
Thank you very much, Mr. Nwachukwu. What about logistics? We have some members of the audience who also want to know whether BUI can finance logistics, especially for the acquisition of vehicles, moving assets.
Yes, when it comes to logistics, BOI is also a group. We have a subsidiary under the BOI called LECOM, and that's the subsidiary we use to facilitate assets like vehicle procurement, motorcycle, and all those ones. If it's logistics, we clearly do that. But if it's also logistics from the aspect of you want to probably procure equipment like maybe haulage equipment or for turnkey operations and all that, we can also process it directly through BOI. So depending on the part of logistics that you fall into, if it's strictly vehicle or motorcycle procurement to use to enable your business, we can do it through our LECOM, which is our subsidiary. But if it's assets procurement to support your procurement, your logistics business, you can do it directly to BOI.
Thank you for that exposition. I'm sure that would have helped a lot of people. On average, what is the average interest rate for this wide range of products and services that BUI offers? What's the lowest interest rate? What's the highest? So within what interest rate band would they be applying?
So what you need to know is that for the most part, BOI loans are single digits. What this means that you can hardly find a facility that is above 10% interest rate. And of course, if you are looking for working capital, which has lower tenure and different terms and conditions, it could be between maybe 10 and 12%. But since the advent of COVID, most of our facilities are below 10% really.
Thank you very much. So for the audience, you can just say single digit, at least under 10%. Thank you so much. One of the things that many people think is that there is no money to lend out there. So what on average would you say is the percentage of intervention funds available through BOI that has not been drawn down or loaned out, which is available for prospective borrowers to apply for?
There's, to be honest, there is quite a lot of funds available for people to apply and get through BOI. The challenge usually is that because BOI is a government agency, if you come to access financing from BOI, we also make sure that you are abiding by some statutory requirements. Is your business registered? Are you paying your taxes? Are your CSC documents in place? Do you have your annual reports? Some of those things. And we know that businesses in Nigeria, especially SMEs, we don't do our bookkeeping up to this standard. So it makes it look like they're not able to access or there's no money to access. But there's a lot of funds, and I can assure you that if you are abiding by the laws and regulations guiding businesses in Nigeria and your business and your books are up to date, you should be able to get financing from BOI. That is absolutely no problem.
Thank you so much. I'm sure that our viewers will be happy to hear that because some of them don't just know that there are funds available. So as the Lagos State Manager of the Bank of Industry, can you tell us what accounts for loan applications not being successful in your
Sorry,
experience?
sorry, I didn't get that.
As the Lagos State Manager of the Bank of Industry, can you tell us what in your experience accounts for loan applications not being successful?
Okay, mostly why most applications are not successful, like I said earlier, first is those that do not have their books accurate and up to date. Second is people that basically do not abide by the statutory requirements of the federal government, like paying tax and having annual returns. But most importantly, usually is people unable to provide the collateral or security to be able to access the funds. And when I say collateral, I don't mean always house or bank guarantee. For our funds below 10 million, we don't even ask for any property or anything. The only thing we ask for is two guarantors for you to be able to access it. And I find out that people that are not even able to bring two guarantors or to vouch for them to be able to pay the loan. So I think those are the three key things that cause inability of people to access funds at BOI.
Thank you so much. So what tips would you give to the audience that would help them package their loan applications successfully?
First things first, go to the BOI website, go through all our products, and find the one that specifically fits what you are doing. Second is make sure you have your books in place in terms of you keep good accounting records, you have your accounts, whether audited or not, based on the level of business you are doing. Your taxes and annual returns are up to date, your statutory documents are up to date, and if you have all these in place, then like 90% of the work is really done. And if you have any other issues, uh, even the host with her consulting firm can always help as a BDSP, help you to package uh, your your application. But mostly it's based on having your statutory documents in place and making sure that you have good accounting records.
Thank you very much. So having your statutory documents in place and having good accounting records are key. Thank you so much. Many prospective borrowers fall by the wayside because of collateral, which you have mentioned yourself. They say that asking them to provide a bank guarantee is tantamount to asking to lending to only people who already have money, because they say that the banks would only give you a bank guarantee if you can provide cash collateral. So if you have the cash, why would you be looking for a loan? So what is the way out in your experience?
Well, that's not completely true. Like I said, we have different classifications of loans. Microcredits are loans below 10 million. You don't need any security, bank guarantee, or property for that. You need just two collaterals, two guarantors. For loans between 10 million and about 200, 300 million, you also do not necessarily need bank guarantee. You can, if you have legal mortgage in terms of property, you should be able to access that. But for most of the big loans above 400, 500 million, you will need a bank guarantee. Why is this the case? BOI, we are not a normal commercial bank, we are a development bank. So once we disburse the money to your bank, we do not have a view of the money anymore until you start paying back. Unlike commercial bank that they disburse to you, they have your accounts. When maybe your monthly returns start going down, they see it, they know when you're getting in trouble and they try to call you to order. We don't have that view. So we need an extra layer of protection, which is through the commercial banks, to make sure that they carry out uh, that role. That being said, the commercial banks, they also benefit a lot from offering bank guarantee to customers. Not as if you don't have cash, you'll not be able to access a BG. Now, your ability to access a BG from a bank depends on your relationship with the bank, because the bank will look at what's your annual turnover normally like. Let's say if you're trying to access a bank guarantee of, let's say, 500 million, and your annual turnover is like just 100 million, you see there's a problem, because they say you are not currently doing this number, so they're not very comfortable that you'll be able to do the returns required for this. But if you are doing annual turnover of 500, 600, 700 million, which they see, and you are coming for a bank guarantee of like 400 million, of course, the bank will be happy to deal with you. But on their own, even as required by the CBN, they must get some sort of security from you. So they're now looking at things like, do you have treasury bills to help to back it up? Do you have LGM bonds? Do you have a property to help to back it up? Or do you even have maybe sovereign guarantee? Those are dependent on the processes that are being carried out by those particular commercial banks. But when it comes to BOI, irrespective of the amount of loan that you want to take, there are different types of security that are required. And even us being a development bank, we're also being regulated by CBN, and some certain amounts of loans we cannot give without proper security.
Thank you very much. This is very illuminating. So, first of all, it's not all loans that you access from the Bank of Industry that require bank guarantee. Loans under 10 million, you can get it with just two guarantors. And even for those where you need a bank guarantee, if you have a relationship with the bank and you have the turnover, then the bank is likely to deal with you. Thank you so much. So many small borrowers complain that the loan application process takes too long and requires too much paperwork. On average, they say it takes more than a month or more to get their loan approved. Some of them end up abandoning the application process and approaching microfinance banks and fintechs for loans at interest rates as high as 5% per month. What do you, what advice do you have for these smaller borrowers?
It comes down to what I said earlier about MSMEs in Nigeria not keeping their books in order and not abiding by the statutory requirements of the government. In SME or microfunds requirements, there are about 20 items required there, and 19 of them are statutory documents. Statutory documents, I mean things like CAC documents, tax returns, uh, your accounts, your statement of accounts from your bank. The only other thing there is your security, which is two guarantors. And SMEs or MSMEs, they come to assessment from BOI and they've not paid taxes for the past 5 years. We are a government agency. We cannot give you funds if you're not paying your tax. You don't have your annual returns. So ask them, go and clear this, then come back. It will turn to BOI is wasting their time. And they don't want to do that because they know if they go to microfinance bank or fintechs, they won't ask them for all the documentation, but they give that at a higher interest rate. We are a government-owned bank, so we must abide by some of these conditions. But like I said earlier, once your books are in order, you pay your taxes, you abide by the processes required for doing business in Nigeria, you have absolutely no problem with accessing financing in BOI.
Thank you so much, Mr. Nwachukwu. So it's very clear that some of the problems that the smaller borrowers are having are self-inflicted. If you're ready to process your um, make sure you're up to date with your statutory requirements and you have good books of accounts, then you are most likely going to be successful. So I think from the perspective of the of us who are BDSPs, we are going to try to help these smaller borrowers by maybe organizing another conference where we speak to affordable ways of keeping their books up to date and keeping their statutory records up to date as well. Thank you so much, Mr. Nwachukwu. Another question that came from the audience is this. They asked if the likes of First Bank are complaining about operating costs, what is the fate of young entrepreneurs with the high cost of production in Nigeria?
That is true. Unfortunately, the various factors of production in Nigeria are difficult to come by in terms of uh, first is power, then access to things like raw materials and infrastructure deficits like the roads that you're even going to move your your materials and equipment through, and those are the difficulties of doing business in Nigeria. However, we also have to learn that some people are pretty much hacking it in the environment. It's something that affects everybody, and everybody's now trying to work smart. Basically, we at BOI we're also trying to promote businesses that have found a way with making the various factors of production, especially power, a bit more affordable and convenient for customers. We encourage and have people that supply solar solutions to MSMEs now in terms of power. And when we are also doing our appraisal, we try to find out uh, industries that have consistently maintained good profits and where there is value to also suggest to the customers coming, if you're playing in this industry, we've seen over the years that it's fine, you're highly to have a value for from this. That being said, uh, there's really not so much we can do from the angle of BOI, but just to encourage customers to do their due diligence, do their feasibility properly, to ensure that what they need to be able to embark on their businesses are there and are able to obtain value and profitability from the sectors they're playing to.
Thank you so much. Um, Thank you for mentioning power because most businesses complain that the cost of power makes their products not profitable. And it's good to know that the Bank of Industry is providing loans to businesses that are helping other businesses by providing power solutions. Could you tell us a little bit more about some of the power solutions you have financed and maybe point the viewers in the right direction of hooking up with these power sources?
Okay, first is we have a group in BOI called pretty much Solar Energy Group. Basically, they try to deal with uh, people that are invested in this particular space. Also at SME division, we also have funded some people that are specifically into uh, waste management and energy generation from waste, as well as solar power provision as too. We have one of our main customers now. I will get the name before we run out, which we've also been trying to suggest to MSMEs, especially in Lagos. If uh, you are having ongoing challenges with power provision, you could approach a customer like this to be able to obtain maybe a solar solution that will help to your business. However, we know that renewable energy can never challenge fossil fuels now in terms of power output and generation. So it depends on the type of business you are doing. If it's something that is generally low energy. Let's say doing something that doesn't require a lot of uh, energy for powering. The solar solutions could work, but if you are doing quite big production or manufacturing, then really you have to go with fossil fuels, and to now depend on the options you are using to make sure that your energy cost comes down.
Thank you very much. So you promised to give us the name of this
Yes,
solar
yes,
provider.
I'll share it with you so you can share with the.
Thank you very much. So, in your experience in the Bank of Industry, are there any other businesses that have access finance who are providing solutions that can reduce other costs of doing business? Because one of the things that BOI wants to promote is linkages and networks that help all businesses do business better. So, just like you've told us about the power solution providers offering solar as a service, are there any other businesses that are doing things that can help other businesses lower their cost of production because they have seen this as an opportunity, or rather, they've seen the problem that Nigerians are having and are addressing it as an opportunity to help other people and make money by helping people. So, what other solutions is the bank aware of that can help bring back down the cost of production?
Okay, first, the name of the solar energy company is Energy Solar Limited. ANERGY, Energy Solar Limited. Uh,
ANERGY,
GY. Yeah,
energy. Okay.
yeah, Energy
I will
Solar
ask
Limited.
Adama, who is in the back office, to type that out and put it on a banner to run across the screen so that the viewers can copy that. That's, I understand it's ANERGY,
ERGY Solar Limited. Okay.
Energy
Yeah,
Solar, ANERGY
GY.
Solar.
Mm.
So Adama, please put that as a banner and let it run across the screen so that people can be aware. So if you're a viewer here today, here is an opportunity to bring down your cost of production. If you are producing things that do not require a lot of energy, you're not running a factory, for example, or maybe you are into the creative industry where your power needs are lower, here is a solution for you to bring down the cost of your power. Thank you so much, Mr. Nwachukwu. That's very, very, very useful.
Okay.
Thank you.
Yeah. In terms of
Adama Lobi.
what other people are doing, or how you'll be able to reduce the cost of doing business in Nigeria, that really depends very much on the sector the individual is playing. I know if some of the ways really to save costs, especially if you're a startup or if you're an SME, includes having things like partnerships with people that are playing in your sector. For example, it depends if you're a food business, instead of you delivery yourself, you could hook up with one of the delivery agents, one of which is maybe you have the likes of Junior or Glovo or all that, basically outsourcing part of your business. If you are also, it might interest people to know that even some of the biggest companies in the world, like some of these uh, telecommunications companies, they outsource almost everything. That the only thing they do in house is probably just marketing and billing. Even their site management is completely outsourced. The outsourcing is a good way to bring down your cost in business, but that will depend, like I said, on the area you are in and what exactly you need help with in terms of reducing the cost. What I would advise business owners, especially SMEs, is to do a proper value chain analysis of their business, how their raw materials come by, and how they distribute their products. If there are some aspects of those business value chains that are currently doing that they think they can comfortably outsource and not get involved in that level of activity, they should do that and try to help reduce their costs.
Thank you so much for these very useful tips. So, our viewers out there, do a value chain analysis, identify the parts of your business that you are not an expert in, and look for people that you can outsource this to who can do a better job than you. It most likely will bring down the cost of your production. Thank you so much. That's very, very, very insightful. Another question we have is, a lot of people in Nigeria have this impression that if you don't know anybody in Nigeria, you cannot get anything done. So some of our viewers have asked, is it possible in Nigeria without knowing anybody to access a loan? So I'm going to ask all our speakers one by one. So, Mr. Nwachukwu, can you get a BOI loan without knowing the MD of the Bank of Industry?
Of course, the MD, to be honest, the MD does not even know the people I give loan to, because for something like the micro loans, he really doesn't have time to approve every level of micro loan. Yeah, so he we are an institutionalized organization, irrespective that we're a government organization. We also have one of the highest ISO standard ratings in the country. We have uh, our Fitch rating is up there. We are really one of the highest rated banks in terms of our processes in Nigeria. So we have strict operational policies, procedures, and processes of which we go by, and there is no interference whatsoever from any level of management on the process that we should follow. So no, you don't have to know anybody before you access financing and BOI. Just walk into my office any day. If you're in Lagos State, it's in Ikeja, Ashabi code number 3. Ask anybody to meet the state manager or any officer, and we'll take up your project from there.
Thank you so much, Mr. Nwachukwu. You've taken a big load off the chest of many people, because many people, um, um, they don't even venture because they just assume, I don't know anybody at the Bank of Industry. Thank you so much. Another question that we have from our audience is, why is it that the banks in Nigeria do not offer managerial support to nurture and ensure the growth of young entrepreneurs? Is there anything that the Bank of Industry is doing in this regard?
Yes, we have quite a few programs. We have what we call the Jeff program and the Yes program. So the Jeff is the graduate entrepreneurial scheme, and the Yes is the youth entrepreneurial scheme. Because we understand most people that are just graduating, or most young people want to start business, and they might not have the skills or enterprise required. What we do is that before we disperse these funds, we send them for extensive training. Yeah, before COVID, they used to go through classroom training. During COVID, we moved most of it virtually now. And other than the training, we're also trying to start even a mentorship scheme. So it goes beyond trying to train them in business and accounting and operational management, but also giving them real life experience through a mentor, so that they gain the required skills before we disburse the funds. So yes, we provide some of these trainings for our customers, depending on the level of the customer and the key area they're playing.
Thank you so much. So you can hear our audience. There are two programs specifically designed to help young entrepreneurs with management support and with capacity building. So please take advantage of these programs. Another question is, how long does it typically take to have your loan approved? And what can you do to make the process shorter?
Ideally, if we have all your documents within 3 weeks to 1 month, you should be able to get your funds.
Thank you very much. So for the audience, if you have all your documents complete within 3 weeks to 1 month, ideally, you should be able to get your loan approved. So it's dependent on documentation. Having your documents complete is very, very important. Why would you say, Mr. Nwachukwu, that startups fail in Nigeria? What have you seen from your experience that causes startups to fail?
Okay, first things first, even in America, uh, ideally 90% of all state startups fail, which is an irony because the book I'm currently reading, if you can see it, the title, safe, the fail safe startup. 90% of startups fail, and why? I'm also trying to understand that, to be able to understand customers better. But a lot of startups fail, and that's just the fact. Why do they fail? For the most parts, really, it's because people delve into businesses that either they don't have experience in, or they don't fully understand. Now, even those that have experiences in certain business and have experience in those business also fail. And that brings in other factors like uh, how well are you experienced in not just production but in management of the business. That's why in large organizations you have people like chief technology officer, you also have the chief financial officer before you have the CEO, because they understand clearly that people that are smart enough to run to know the technological or technical parts of the business might not be necessarily book or finance savvy. So the person running the business, is he as smart in how to run the business as the person is on how to keep the financial books? Because those are two key things that can wreck you. Now, let's even assume that you are technologically sound and probably not very good in the financial and the business aspect of it. So there are two things you can do. You can upgrade yourself or update yourself by doing trainings and learning this aspect, or you can get a partner or somebody that you know that is good in this particular aspect to partner with in order to make sure that all your angles are being covered. But also, we have businesses that the proprietor is good in the technical aspect and either good in the financial business aspect as well, or has somebody doing that, and they still fail. Why is that? Sometimes the environment also plays a big factor in terms of maybe your business is highly dependent on use of energy, which is like, let's say, for diesel now. And just 2 months ago, diesel was being sold at about 200, 300 naira. Now it's being sold at 600, almost 700 naira. Those are factors completely beyond your control. There are ways to mitigate some of these, but there are some other factors that really there is nothing the person can be able to do. What I would advise is, as you are starting your business, as you are growing your business, do also a proper risk analysis in terms of identify those things you think that can put you out of business very quickly. When you identify them, then develop mitigating steps also in case of the occurrences. So it's better that when you know that if diesel price doubles, it makes your cost above the revenue you get. You already know it clearly. So now think of what is the mitigating step. Is it if you used to have a 10 p.m. closing time to now bring down your closing time to 4 p.m.? Is it to increase the price of your product marginally to meet your cost of production? So those terms you already have them. So when those things are happening, you are quickly kicking your operations into process. I think those are really uh, what I would advise anybody starting or running any business to do in order to mitigate the case of being quickly put out of business or failing as a startup.
Thank you so much. That's very, very insightful. So, for our viewers out there, if you're running a business and you're not an expert in all the key functions of your business, please get a partner or employ someone who is. Next, make sure you do a proper risk analysis, understand the things that can prevent you from achieving your objectives, and have a risk mitigation or risk management plan in place. Thank you so much, Mr. Nwachukwu. I was about to ask, my next question was going to be, it's so nice to see that you're reading this book, Fail Safe Startup. And I was going to ask, since you have read the book or you are reading the book, what tips can you share? And I think you've shared two already, which is make sure you have expertise in all the key functions of your business and make sure you do a risk analysis. What else can businesses do to become fail safe startups?
Well, it's part of what we have pretty much been talking since. If I may enumerate a few, making sure you have experience and expertise in what you're doing, in terms of you can't be maybe you've been in paid employment all your life, maybe as a teacher or something, and suddenly without having any experience in fish farming, you decide to start fish farming. It does not work that way. First, go and do some learning in fish farming before you start. So make sure you have the skills and experience. Secondly, get the best people to help you work in areas especially you are deficient in. If you don't have good skills in finance or business management, get people help you deliver that. Third, try to solve a problem. Don't just start a business because you want to start a business. Look at the environment, identify a gap that needs to be met, then try to fill in that gap. That way, you are more likely to have off takers that will make sure that your business remains in operation, even if there are price fluctuations or any of that. And I guess the fourth one is, like I said earlier, carry out appropriate or proper uh, risk analysis and develop a risk management framework for your business. And when you have these things in place, you are likely to be able to meet any challenge or most of the challenges that will be thrown at you while you are doing your business. Unlike if you absolutely have nothing in place and all of a sudden it seems everything is falling from the sky on your head.
Thank you so much. That's very, very useful indeed. And you have saved our viewers a lot of time and trouble and efforts. You digested that book and given it to us in some succinct points. So, for our viewers out there, in addition to having expertise in the core functions, in addition to doing a risk analysis, make sure you are meeting a need. Do a gap analysis. Don't just start a business because everybody else is in business or because you want to become an entrepreneur. We have the pure water bandwagon effect. Everybody thinks pure water sells, they just jump into pure water, whether there is a need or not. Thank you so much, Mr. Nwachukwu. One of the things you've told us about getting a loan from BOI is that you must have your documentation correct. You must be statutorily up to date and you must have proper books and accounts. Now, let us assume that somebody has all of these. What is the Bank of Industry as a lender looking at and considering before putting their funds at risk? Assuming that the prospective borrower, has his financials, he's statutorily up to date, and all his books are in order. What would the Bank of Industry be considering to decide whether to give this borrower a loan or not?
Okay, there are two considerations. One is whether you're a startup or you're an existing business. There are different considerations for both. Of course, if you're a startup, the burden of proof is much higher because you don't have the track record to show. For businesses already in operation, we are looking at your books to see that, okay, there has been growth year on year. We are looking at your turnover. We are looking at how you are doing. We are seeing that the off takers also asking for your off takers. We are seeing that you are meeting a need in the market or in the industry. And we also, because as you are coming, we probably also have like 10 people coming from that particular sector. We already have knowledge of the sector to see that it's a sector that most people in that sector are doing well, they're consistently repaying their loan, and it's a sector that needs exploitation. That is fine. We move ahead, we grant you the loan. If you're a startup, like I said earlier, your burden of proof is a bit more because you don't have the books to show that you have been doing well consistently. So we are taking more or less a leap of faith in you. In that situation, we are now looking at the quality or the strength of your feasibility study in terms of, have you looked at the environment that you want to enter into? Have you identified the gaps? Have you seen the weak points that you need to exploit? And what are your plans in terms of business and operating strategy in order to be able to enable your business operation? So those are the things really, depending on your startup or your ongoing business. The factors we are looking at differ a bit, but the most consistent thing is that the industry you are going into, there's opportunity there, and there's a gap that needs to be filled, and you have proper plans to be able to fill that gap.
Okay, thank you so much for that very, very insightful observation of what you'll be looking at. So, if you're a prospective borrower out there, you first have to identify whether you are a startup or an existing business to understand what the Bank of Industry will be looking at and to make sure that your presentation or your loan application addresses those questions even before they are asked. So, if you're a startup, you have no track record, the bank will be looking at the strength of your feasibility reports, whether you've addressed the needs in the market, whether you've identified the gaps and now you're filling a gap, and whether you have a response to all the issues that may arise in the course of your business. That is a proper risk analysis. And if you're an existing business, then the Bank of Industry will be looking at your turnover, your performance to date, what your competitors are doing, to know whether you are fitting in line with the kind of expectation they have for that sector or industry. So if you're a borrower out there and you want to apply for a loan, make sure that you have addressed all these issues to ensure that you give yourself the best opportunity of getting your loan approved on a timely basis. Thank you so much, Mr. Nwachukwu. Now, I would like to ask, if somebody sends in an application and he has not completely addressed all these things that you'll be looking at, what happens next? You just reject the loan application, or do you
No,
give him an opportunity
not
to?
at all. Not at all. When you send in an application, uh, ideally it comes to my desk first. I review it and I assign it to a project officer. The project officer will go through all your documents and give an acknowledgement. In fact, we are mandated to give that acknowledgement within 24 hours of receiving your application. And the acknowledgement, it has the checklist of all the things that are required from you, of which the project officer will tick all the ones you provided and indicate the ones you have not provided, and ask you to provide those documents for us to proceed with your application. So we don't reject, we acknowledge, we tell you what is remaining, and we take it from there.
Thank you so much. That's, I'm sure, very comforting to our viewers out there. So you have an opportunity to make amends should your application fall short of the requirements. But the best way to be successful is to know what is expected of you and try to put your best foot forward at the beginning. That will also shorten the loan application process. At this point in time, as we start rounding up, I would like to ask Adama, who is in the back stage there, whether we have any additional questions from the audience. If there are, please put them on the screen so that we can pose them to Mr. Nwachukwu. Okay. It looks like there are no additional questions coming from the audience. So, Mr. Nwachukwu, we thank you so much for coming on the program. And as we get ready to go, I would just like you to share your top 3 tips for prospective borrowers out there.
Okay. From my perspective, the top 3 tips I will give to any borrower, that things I've mentioned really. Number one is to make sure that your business is addressing a specific need in the environment, society, industry, whatever it is. Second, make sure that your books are in order. By books, I mean your statutory books, your finances, your accounts, and all that, because that's the only way those assessing your finance are able to understand your business and how you are doing better and be able to afford your facility. And third, package your application based on the requirements of BOI, of which fortunately we have BDSPs that can help you do that. The host can graciously help you to do the packaging that is required and submission to BOI, so that when it comes to BOI, the package will be complete and will proceed immediately in reviewing and approving your credit without much back and forth. I think those are the 3 key advice I would give to prospective applicants.
Thank you so much. And finally, I would like to ask on behalf of our audience, many of times borrowers come and they say, I am not buying plant and equipment. I'm looking for working capital. Does the Bank of Industry provide working capital? As BDSPs, we know the answer to that. But I'm sure they would like to hear from you what alternative arrangements you have in place to assist borrowers access working capital.
To be honest, we actually finance working capital, but based on us being an industrialization bank, we look a bit more kindly into uh, financing working capital when it's also coming with an asset financing request, because we understand that, let's say you are going into cashew processing, for instance, and we're financing the cashew processing equipment. We can't let's say you are currently doing a capacity of, let's say, 10 bags a day. I will now giving you a machine that will increase your capacity to 100 bags a day. We understand that you also might not have the finance to buy the extra 100 bags that are required in terms of the working capital. So we also provide working capital to help assist you when the working capital is raw materials. The working capital we don't provide is when if you are looking for money to use to pay for pay your salary of your staff or pay for energy bills or what. No, we provide working capital when it comes to the raw materials you need to run your business.
Thank you very much, Mr. Nwachukwu. So working capital is available if it's to finance raw materials, not fixed operating costs like salaries. At what
Exactly.
interest rate would this working capital come at?
Between 8 and 10% really because of COVID, but before COVID it was about 12%. But like I said, every loan facility at BOI mostly is uh, below 10%.
Thank you very much, Mr. Nwachukwu. I'm sure the viewers have had a lot of their questions answered. This has been a very enlightening interview. Many times people fail because of lack of knowledge. They are not aware of what's available. Sometimes they limit themselves by not asking questions. So, sir, you have really, really made a lot of our viewers more comfortable about accessing finance in Nigeria. And we want to thank you so much. And we pray that when we invite you again to answer more questions, that you will be kind enough to oblige. Thank you so much, sir. And it
All
was a
right.
great pleasure and honor having you on our program today.
Thank you so much. I appreciate it.
Thank you. Thank you so much, sir. Hello.
Yes, thank you so much, Ijoma. Good morning still.
Good morning still. So it's nice to have you on the program today. So for our viewers out there, Mr. Nwachukwu is a fellow of the Institute of Chartered Accountants of Nigeria. He's a fellow of the Chartered Institute of Bankers. He's the founder and group MD CEO of Spring Bank. He was a former group MD CEO of Guardian Express Bank. He's a fellow of the Institute of Chartered Accountants of Nigeria, I said already. He trained in Price Waterhouse, now called Price Waterhouse Coopers. He's also a fellow of the Nigerian Institute of Management, a fellow of the Chartered Institute of Taxation of Nigeria, and the founder and chairman of Assetswise Capital Limited since 2007. He is married with children, 4 grown-up children for that matter, and is happily married for that matter. So please welcome Mr. Mike Chukwu. Thank you. So, Mike, we just finished interviewing the Lagos State Manager of the Bank of Industry, and he's spoken to development finance institutions and how they can help businesses in Nigeria access funds. Assetswise Capital is in the space of private equity and venture capital. So, how can private equity companies and venture capital companies help borrowers in Nigeria?
Well, the major distinguishing factor that distinguishes private equity and venture capital firms from banks is the nature of the services they provide. They provide long-term capital. They're there to support small-scale businesses in the long term, not only in terms of short-term financial needs, but also in terms of private equity. Equity being the funds that are available to the managers of the business in the long term. So we focus on long-term financing, but more importantly, we try to look at the entire space of resources required by the company to operate. There's always a misconception that the only resource required by small-scale enterprises is capital or financing. That is a big misconception. In my experience, the people forget that in classical economics, we are taught that there are 4 factors of capital and organization, but people focus too much on capital to the exclusion of organization. Organization is the application of managerial skills and competencies to manage the business. And that includes the ability to think into the future about the business, what we call the visioning process. It also includes the process of setting up management, arranging a strategy for the business, as well as hand-holding that business for a period of time, those skills to the managers of the business. So that is where we differ from the regular providers of finance. They tend to give money and get away. Ours is to give money plus other resources, particularly managerial resources. And therefore, we stand ready to assist people in that space to develop their strategy. First of all, what do you want to really do? Do you have a strategy? Do you have a business plan in place? We can help you to formulate one. And then more importantly, we stay with you throughout the process. If you look at some of the reasons why small-scale businesses fail, it's also because they do not have some, adequate corporate governance mechanisms. Corporate governance mechanisms include, for example, what kind of experience do they have? What knowledge of corporate law or business law do they have? Have they ever prepared a business plan? Can they interrogate the business model, ask questions, and ensure there is internal consistency? So the role we provide as private equity and venture capital firms is to go beyond financial resources, which are important, but also look at managerial resources that are required by businesses to prosper.
Thank you so much. In fact, you anticipated and have answered a question that was directed to Mr. Uche Nwachukwu. Somebody had said, why is it that banks in Nigeria do not offer managerial support to entrepreneurs, especially startups? So in addition to whatever else that is on offer from banks, here is an opportunity for borrowers to have this kind of hand-holding, even input into your strategy. That's awesome. And I'm sure many people in the audience don't know about this. So what would you say are your top 3 tips, that you like to share about accessing finance? I'm still going to ask you specific questions, but for anyone who just wanted a takeaway, what would those 3 tips be?
Well, I had already hinted at what I consider to be the first. The first point is that financing is important, or finance is important, but there are more important considerations. So for anybody who wants to borrow money, I always ask, do you have a business plan? So start from the beginning. As I say, start with the end in mind. A business plan enables you to look at what you really want to end up with in your company. What are your objectives, your strategies, and then you can articulate them. Most of the people who go to banks and other financiers to look for money are not clear in their mind where those resources to. And once they begin to ask them questions, they fall apart easily. Secondly, whoever wants to borrow money, in my opinion, should look at the mindset of the person who is giving him the money. The mindset of people who give you the money is, will I be able to get my money back? And will I get it back with some reward, maybe in the form of interest or in the form of dividend? So try to anticipate what will interest them. And usually what will interest them includes, who am I dealing with? What is the reputation of the person I'm dealing with? What is the character of the person I'm dealing with? What is his track record? Who are behind him? I see young people who want to start a business, and I say, some of the time it makes more sense to serve a period of tutelage with somebody who has done that business successfully. That will expose you to some practical experience. Every business has its own tricks. You may have to pay to get those secrets of that business.
Thank you very much.
Business.
Yeah, go on.
Okay, so once you have worked in that business for a while, you will learn the tricks, you will learn the ropes, as it were. And for the person who is trying to invest, he wants to be assured that you have the wherewithal, the capacity, the knowledge, the track record to be able to deploy the capital that he's going to give you, and then any reward in due course. And finally, I would encourage you to have a strategy to be there in the long term. Most of the people who come to the short-term mentality, what can I take this money quickly and deploy to? And that is where they miss it. I also think that the last point I will mention, even though you say I should limit myself to 3, is those who are borrowing to you, who are lending to you rather, are interested in the corporate governance mechanisms in your company. A few years ago, I had cause to, when I was in the banking sector, I had cause to advise one of my clients privately. And the issue was that he had started this company, successfully deployed, and then at a point he wanted additional capital, and he went to some venture capital firm that gave him the money. But they were quarreling constantly because he had not risen above the fact that the company is not only him, the company has a separate legal personality from him. So he was constantly dipping his hands into the till of the company to meet personal needs. So if you are going to convince somebody who wants to lend to you to do so, he wants to see evidence that you are, so enable you realize that the company is different from you as an individual.
Thank you very much. You're very generous. We asked for 3, you gave us 4. So to summarize for the audience, they must have a business plan. They must have a strategy. They must have experience. Young people out there who want to drive G-Wagons before they have done anything, please learn from this. Work for somebody. Get experience. Even if you don't get a big salary, as it is said, if you're doing a job, you can do it for either of 2 reasons. You're doing it to earn money or you're doing it to learn. So please learn before you start running your own business, because the lenders out there or financiers are going to look at your track record. So your track record may not necessarily be in running that business, but it could be the track record you have in running that type of business for somebody else. And finally, you should have corporate governance. Thank you so much, Mr. Chukwu, for that very insightful top 4 tips. And this leads us directly into the next question. How does your firm help businesses raise the finance they need? You have made the point that before we talk about money, we should talk about the plan, the strategy, the experience. Let us assume that they have all of these. How can you help them? And what are the advantages of sourcing their finance or the type of finance that you offer?
Well, the major thing we do is to use our network, our access to the market, our access to the financial place for the benefit of the client. So you find when somebody approaches us, maybe when an entrepreneur approaches us to assist in raising money, we would avail our expertise, first of all, in preparing the documents that would enable him persuade investors to put their money. You know, there are certain things in an investment proposal. We will have to interview the customer, we have to interview the prospective entrepreneur, ask the relevant questions, and anticipate the questions that the investors will be asking. And then we will now prepare a business, a proposal, an investment proposal, which we can place with our clients, our customers who are investors, who are looking for opportunities to invest in. And then we can do some form of hand-holding. You know, we have joined our clients in meetings with banks. Usually when you are talking to bankers, they themselves will be persuaded if they see on your side people who have experience. So we avail our experience, we avail our network, we have contact with virtually all the banks, speak easily to them and with them, and we can help in hand-holding the customer or the client in this case in approaching the banks. The second part of the question, you may have to remind me.
Yes, the second part of the question is what's the benefit of accessing the type of finance that you have to offer?
Yes, the benefits basically are, one, is long-term in nature. We provide equity financing. As the name private equity suggests, is long-term in nature, in which case it gives the entrepreneur more breathing space. Some of the businesses fail, some of them use the wrong type of finance. You want to, if for example, you have done a business proposal that anticipates you make money in 5 years, and you go and take an overdraft that you have to repay every 30 days. you are just setting up yourself for high blood pressure, because every 30 days, the bank will come calling. Maybe at that point, you have not even set up the factory. Maybe at that point, you have not even set up the office. So we ensure you get the right type of capital. And that is one of the major benefits you get from us, the tenure of the capital, which is long-term. Secondly, you are spared the strain of regularly, we get our rewards not in form of interest payments, but in form of dividend. So we do not have to cope with the pressure of monthly interest payments, which is also something that puts pressure on young startups. So you can be relieved from worrying about interest payments in the short term. Then the other advantage is because we are equity owners, we are joint owners of the business with you. So our interest, we are not into the business of usury. We don't just give you money and then, whether for good or for bad, you must pay us. It means that we share risks with you. If things are good, as we hope it will be, we will share in the upside risks. If things are bad, we also share in the downside risks, which means that we are prepared to put out our money on the table, and we are prepared to lose our money if the business goes wrong. Those are the major benefits you get from working with a private equity firm.
Thank you very much. Those are very key benefits. One, a longer tenure. Two, the fact that they don't have to pay interest, they pay dividend to you. And three, that you're sharing the risk with them. So if it goes belly up, that means you're losing your money, and that means you're more committed to their success. In fact, more committed than the person borrowing it is possible.
Absolutely.
Listening to you, I can see there's a lot of passion. This doesn't look like a money-making venture from the way I perceive it, because you've talked about hand-holding, you take them for meetings, you help them talk to the investor. You even mentioned helping them talk to banks. So even though you're not giving, typical interest-bearing loans, if they have a need to go to a bank, you will be there as a rock that has experience talking on their behalf. You're in their corner all the time. So
Yes.
This, to me, looks like this is not a business somebody goes into just to make money. So what made you go into this business of private equity?
You are absolutely right. There's some altruistic element of it. Altruism, to the extent that we are all operating the Nigerian business space. And we have seen that done, particularly with regards to the small scale enterprises. We worry about the way our economy is headed. We worry about the fact that unemployment is on the increase. We worry about young people who leave school and they do not get employment. So there is a lot more urge for young people to go into self-employment, to go into entrepreneurship. And therefore, there's a lot of work to be done in that space. So first, there is a market, there is a gap to be filled. And we are in that space to assist in filling that gap of creating employment, creating self-employment, and providing goods and services for the Nigerian economy. If you look at other economies, small and medium scale enterprises are the greatest employer of labor. They're also the ones who provide the day-to-day needs of most of the people. There will be corporate entities, the big corporates, the multinationals, but we need the daddy and mommy, or daddy and son, or son, daughter and mother businesses that recruit 1 person, 2 persons, 10 persons, 15 persons to also operate. And they tend to be the bulwark. The first reason we are in that space is that there's a gap to be filled. But secondly, we are leveraging our expertise. I have under my belt over 30 years experience as a banker. I trained as a chartered accountant, and therefore I think I'm equipped to assist people in that space. In my 30 years experience as a banker, one of the learning points for me, which I've already said earlier on, is that finance is not the major reasons why small-scale businesses fail. They fail for lack of knowledge. The scriptures say, "My people fail for lack of a vision." So we are there also in that space to assist, to articulate people's vision. People have very big dreams. I speak to young people regularly. There's a transaction I'm doing right now, and it's in the space of retail electricity distribution. And the young man who came to me, he has very vague ideas of of the need in that space. He said he worries that a lot of people do not have meters in their houses. He worries about the fact that a lot of small-scale businesses are unable to operate because power is not readily available. So he came with a vision of how we can tap into alternative energy, how we can ensure that people who do not have the money to buy meters can share in a meter. So he has big ideas, very fantastic ideas. So our job is to interrogate him, to work with him, and to see how elements of that vision and articulate it and make a strategy, a whole strategy. And we can go back and forth with him, act as his sounding board, so that some of his notions about what he can do and what he cannot do can be clarified. So the second point is to assist to build capacity in that environment. And then finally, as I said, there's money to be made. I'm sure all of us every day listen to the recent explosion of fintech in Nigeria. We hear about young Nigerians who start companies, and then suddenly some foreigners are willing to come and pay millions of dollars or hundreds of dollars to buy out those companies. We think that the entrepreneurial spirit in Nigeria is enormous. We see young people every day who have beautiful ideas of what they can do, and they just need people to help champion those ideas, to help incubate those ideas. So we are there to make the money. Truly, most small-scale businesses fail. Truly, if you're in the private equity space, you will encounter quite a significant amount of losses. But you need only about 10% of your transactions to succeed, to recover the bad loans or the bad monies you have put in, the ones that fail. And because we do not earn money on a day-to-day basis, we wait for the big payday. And the big payday always does come. That big payday is when, because we invest not to stay in that business perpetually, we invest to exit at some point. So at the point when we are ready to exit, you will find that either the person, the entrepreneur with whom we have worked, is willing to buy us out at a premium, have built a successful business. There are other investors who are willing to come and buy us out at a premium. And that usually is the big payday. Yesterday, I'm sure many of us will have read or will have been following the story about Elon Musk, who has bought into Twitter. And we are hearing the kind of figures that are being quoted, $44 billion. If you look at it, Twitter may all the money that I've spent to put Twitter up to this point may not even be up to $1 million and $1 billion. And now they're selling at $44 billion. In the local space, I'm sure we have heard about Flutterwave. We have heard about recently our sister who was doing a business in cabling and distribution of telecoms facilities, who sold her company. I'm talking about Main One. We heard recently that she sold her company, and we heard the kind of figures that are being quoted. So there's always a big payday. And in my experience, if you are in the private equity space and you are consistent in what you're doing, that big.
Thank you very much. So in summary, you are telling us that there is a need. You are trying to fill that need. You do have some level of altruistic intentions, but that there is money to be made if you're consistent and stay the long haul. And because of your experience in banking for over 30 years, you know where the pitfalls are, you know how to handhold people, you know how to help them articulate their strategy, bring out the best from them, and maybe take them higher than they would go by themselves. So that's awesome. So if you're a young person out there, this is something
the way it works. Yes, absolutely. The truth of the matter is the private equity space is largely undeveloped in Nigeria. We have very little accumulation of long-term capital. And because everybody seems to be in a haste, everybody wants to be a contractor. You go to Abuja or to Lagos or wherever they are sharing money. You get a contract in 2-3 weeks, you are paid and you get out of it. So people are not playing enough in that space. And people are not saving enough for capital accumulation in that space. So you find that is one of the frustrations of young people who want to go into business. They go to a bank, for example, and say, I want to do a business to set up a factory, for example. Setting up a factory might take you 2 years, from the point of inception, point of conceptualization, acquisition of land, building, assuming you have to build from the scratch, building, maybe you need to import the equipment, maybe you need to fabricate locally. By the time you install them, test run them, and you deploy, you're probably in the second year. But how many people can go to a bank and say, give me a 2-year or a 5-year or even a 10-year loan? It's not readily available. Unfortunately, because of the structure of our economy, also because of the incentives or disincentives for long-term investment. So you find banks are not lending long-term, and finance houses are also not lending long-term. You go to a finance company, they want to do LPO financing, which cycles out in 30 days, in 60 days, in 90 days. So the private equity firm space is largely a virgin ground, and therefore, for my company, we think is the place to play in. It's a lot more risky. You need to be a lot more patient, but in the long term, the rewards are worth the wait.
Thank you so much. My takeaway from that is that everybody should cultivate the culture of delayed gratification, because if you did not have that attitude of or mindset of delayed gratification, you wouldn't be here offering this kind of help. And when you answered the previous question, you mentioned a couple of examples in the fintech space. So I want to find out, what sectors do you serve? Is it just fintech alone?
Yes, we started mostly from financial services. We've done an investment in the mortgage space, mortgage banking space. We've done an investment in the investment securities trading space. We've done an investment recently in the microfinance banking space. So, we are finance people. So we started naturally in supporting other businesses that help in distributing retail finance. But we have also done business in the fintech space. As a matter of fact, a company I supported, Ethereum Networks Limited, and of which I'm still the chairman, was the first company that went into the mobile money space in Nigeria. In 2008, 2009, during Soludo's time, we went to CBN. At that time, a pair of young professionals who had also left banking came to me. One of them happened to have been my former colleague in banking, and said he has an idea that we can use phones to transfer money, that he has heard about M-Pesa. It wasn't here in Nigeria at that time, 2008, 2009. And I said to him, look, this is banking. I took him to Abuja, and we met with Suleiman Barao, who at that time was the deputy governor of CBN in charge of banking operations. I said, well, CBN didn't have any framework to support fintech business in Nigeria. So we became the guinea pigs. We worked with CBN for about a year or two, developed the templates, developed the materials. And unfortunately, well, not unfortunately, as it happened in 2011, after 2 years of working with CBN to develop the framework for mobile money operations in Nigeria, at the time it was time to give us the license, it was Sanusi had come into they should advertise it, and whoever else wants to do that business should apply. So we ended up with about 14 companies and later on 22 companies getting a license, of which we were one of them. So we've played in the fintech space. The company hasn't been as successful as we initially planned. However, the company is still thriving because we are doing some other transactions in that fintech space, and those ones are now more promising and they are doing very well. We've done business in the hospitality and entertainment space. We supported a restaurant that started in Lekki, and we were there with them until they took off. We've done business in the oil and gas downstream sector, involving remediation of the environment in River State. Interestingly, that transaction was a takeover. It wasn't a startup. The founder of the company turned 80 years old, and he decided it was time to retire fully. He had worked in that jeep for a long time before setting up the company. So when he decided to retire, we led a group of investors to buy him out, and we restructured the company. And the company is thriving there. They're operating in Port Harcourt. We've done business. We've done some transactions in based businesses, retail business involved in distributing retail products, pharmacy, and so on and so forth. And then the one I said we are discussing right now, or rather we are working on right now, is a startup, but it's in the electricity distribution space. The young man wants to play in the downstream electricity distribution space, and we are working with him to develop a model for distribution of alternative energy, including solar, using solar panels, and then acting as a retailer of electricity in rural areas. So that's the transition we're working on. So you can see we've supported businesses in all spheres, particularly those that involve consumer-based needs, everyday needs of customers, food, beverages, entertainment, and then distribution of retail products such as electricity.
Thank you very much. So if I can summarize, you are interested in both greenfield and brownfield investments. You
Absolutely.
are able to finance in any sector at all. It's just a question of understanding the business, although you seem to have a preference for the retail sector. So
Absolutely.
for viewers out there, whether you are a startup or you're buying over an existing business or you've been in existence, you can get access to private equity finance from Assetswise Capital. Also, listening to you, I understand that some businesses that you have financed have done better than others. So just to lead into the next question, in your experiences, and why do startups fail? And for those who don't fail, what marks out the ones who succeed and the ones who just, survive?
Well, there are so many a myriad of factors to account for some of them. But for me, the critical one has to do with lack of a plan. A lot of young people dive into startups, and it's understandable why they do so. You find people who are frustrated, they have left school for 2 years, 3 years, 5 years, they haven't got a job. And then suddenly someone says, this man is selling, like somebody said to me over the last weekend, there's somebody who is distributing small chops that it looks like a very easy thing to do, and I'm going to start small chops business. And I said, well, it looks nice, but you need to have a business plan. You have to do some study. You have to understand what are the success factors for that business. Every business has a business secret. So what are the success factors? How do you want to play the game? In which segments of the market do you want to play? What kind of small chops do you want to do? There's a difference between puff puff and maybe the other ones we hear shawarma, or the other ones we hear, these days. So where do you want to play? How do you want to go about it? How much do you need to start? When I started asking the young person those questions, I knew, he had no business plan. He said, well, I just want to start. I have some 30 or 40,000. Let me just start small. I would use my uncle's kitchen. I will fry and all that. Yeah, you can start small. I'm not saying we shouldn't start small, but I'm only saying that I could see he had not thought through the business. He just thought, well, the business is just as easy as just fry, selling. But you need to reflect on what can make you succeed. What do I need to succeed? What are the resources? Who are the other people in the market space? What are they doing? What can I do differently? If the market space is fragmented or is a little choked up, that can be a market space where you have too many operators. How can I be noticed? How can I make myself different? Is it by the way I package my product? Is it by playing a different market? So these are questions young people don't ask themselves. They dive into business. So for me, the first reason is lack of planning. And we all know this famous cliche that if you fail to plan, you're actually planning to fail. So I think young people should spend more time planning. In my experience, when I was working a 9-to-5 job, we used to work a lot of time planning. When I was in the bankings, in a bank, there were times we spend the whole day doing strategy retreat, strategy session, planning and planning. One of my bosses used to say we are planning ourselves to death. So planning is very, very key if you want to succeed, and preparation is crucial to success. Then the second point, which I mentioned, is lack. No matter how simple the business looks, please try and do some apprenticeship. is something that young people do not want to do. I have even relatives who you say to them, why don't you go and talk to this person? You say you want to do this kind of business. Why don't you go and talk to this other person who is doing it? If possible, stay with him for a while. And the person will say, well, he won't pay me well. And I say, well, if you learn after 6 months, even if he didn't pay you, the shortfall in the salary you thought you should have earned, take it as an allowance for on-the-job training. I remember when we worked in Pricewaterhouse many years ago. There was a time when many of us felt what we were paid in the firm was lower than what we could get working for maybe commercial banks or for some other firms or manufacturing companies. But the experience we learned, we gained working in Pricewaterhouse for 4 years was enormous. And I know the joke in those days was that the balance of your salaries on the job training, OJT. So if you decide to go and serve apprenticeship with some person, do not be focused solely on how much you will gain at that time. Focus on the long term, that you are gaining skills, you are gaining market knowledge, you are getting customers knowledge. Usually once you have done apprenticeship somewhere, as you are leaving, you go with customers, you will go with colleagues, with people who have experienced, who have experience of you working for them. You have marketed them, you have delivered products to them, you have delivered services to them. And therefore, when you move on, they are your first customers naturally. Some may not move. You may not want to poach all your former bosses' customers, but there are some who move with you. There's some who share with a customer base. You are going with knowledge of market. You are going with knowledge of customers. You are going with practical knowledge, which you cannot buy. So a lot of small-scale businesses fail because the proprietors, the entrepreneurs who start those businesses are not patient to learn the ropes before they dive into the deep end of the pool. Then the other point is lack of mentorship. And I'm happy we're having this conversation today. Mentorship is crucial to doing well, particularly in a startup. You need to have somebody who occasionally can look in and say, how are you doing? Who you can occasionally run to and share ideas, who you can run to sound as a sounding board, to use as a sounding board, who you can run to share experience of difficulties, and who you can leverage on his own prior experience of that business. So if you can find a mentor in any line of business, you are more likely to succeed than if you went all by yourself. The other point is inadequacy of capital and finance. I mentioned it because some of the time, people are unable to raise all the capital they need to start. And they will say, well, let me just start. But in my experience, there is a critical mass of capital you need to succeed in every business, and if you have not raised, up to that critical minimum, please do not venture in, because that little you already have, you will lose it. People get into a business, the person has gone ahead to pay for land he has to build. He has not thought through that after building, he has to equip. He has not thought through. So he now goes to buy land, and then he's not able to continue, and he's stuck. At that point, that land is wasting away, and he's getting frustrated because the little capital he had tied it down. So is there in the scriptures. They say, which man would want to start building a house that will not sit down and think to the very end how much it will cost him to get to the end? That if you go ahead and start and you build halfway and you abandon it, people will laugh at you. Is there in the scriptures? It's not me that says so. It's useless man, stupid man, foolish man. He didn't sit down to count all the money he needed to get to the end. So you need to sit down and think through. Otherwise, you can get midstream and you are stuck. Then the other point is poor corporate governance. And I've mentioned some of the issues with startups. People start up and they do not know that the business is different from them. It sounds very illogical that I will start a business and you say, this business is different from me. But that is the way businesses go. The business has a life of its own. So you need to incorporate the business. You need to capitalize the business, put capital in the business, and respect the boundaries. Most startups fail because people do not respect the boundaries between them as individuals and the business they own. So the man has a personal problem. He dips into the capital of the business to solve the problem. He wants to go and entertain friends. He dips into the business to So end of the month, the business is impoverished of capital, is depleted of capital. I consulted for a company where some investors are putting money, and they now demanded that he should start preparing financial statements on a monthly basis. And he was resisting it because he had always run the business in a way that he is the business. He can be in a party, and from there he will send money to somebody without documenting. From there, he can make commitments without thinking it through. So begin to have structures for corporate governance. Those structures include having a board of directors. If you're a startup, it doesn't stop you from approaching people who are more experienced and begging them to serve on your board of directors, and not just using them as decorative board of directors who are there for the letterhead, that you hold regular board meetings. Make sure you present annual accounts, weekly accounts, monthly accounts when you have those meetings. Make sure that you invite their honest criticism. Make sure that you willingly respond to their questions and their challenges. Don't say, this is my business. So if you have those corporate governance mechanisms in place, if you don't dip your hands into the till, if you respect the boundary between you and the company that you own, you are likely to succeed. And then the other issue is poor financial controls. They do not keep records. The man just operates, he spends as he wishes. So when he goes to maybe a bank to borrow, and they're saying, go and bring your accounts, he has not prepared accounts. He has no records. So he will now start cooking, what they call cooking records. He will now approach someone and say, please prepare something for me that the bank will like. And then they prepare the thing, he takes it to the bank, and they start asking him questions, and he falls apart because, of course, any house that is built on shaky foundation, on the sand, will not stand. So poor financial controls, keep records. Accounting is core to business success. As we say, accounting is the language of business. What does that tell you? You cannot operate a business without learning accounting. We're not saying you should go and have an ACA. We're not saying you should have a master's in accounting, but we're saying records of accounts, simple bookkeeping, cash records. If you need to, you can employ somebody either permanently or temporarily, what we call shared resources. You can have accountants you don't have to pay to be on your payroll. You can have people, consultants, consultants you pay. They can come in once a month to keep your books. You can recruit somebody who has an OND. It doesn't have to be someone who has ACA. You can recruit someone who has an OND. But the problem is not important. It's the core of a business. It's a language. Accounting is the language of business. So you must do accounting, no matter how rudimentary the accounting is. They also fail. Businesses, small-scale business also fail because of lack of access. Access to capital, which we have mentioned, and access to market, which sometimes the people do not recognize. Access to market is as important as access to capital, which is why I encourage all of us who are young people who are in the business of startups to look for mentors who can help open doors for us. There are mentors who may be in the same business with you and who will take you under their wings, and you can be a sub-dealer. If you look at the distributive trade, for example, Coca-Cola will have a major distributor. They will have a sub-distributor. They will have depot. They will have retailers. So you can go under the wing of a major distributor, and he will teach you the rudiments and give you access to the market. So access to market is also a major point where they fail. And then the final point I want to mention is the mentality of the entrepreneur. Please think long term if you're an entrepreneur. Don't think you are there to make money in a get rich quick, get rich syndrome. It is the bane of businesses in Nigeria today. I think the host mentioned it, where people think that Dangote is a multi-billionaire. But many of us who are in the market long enough knew Dangote when he was starting his business life, and he went through the ropes. It took him quite a while to build up, but he stayed committed. He had a long-term vision. So if you have a long-term mentality, the way you position, the decisions you take will be totally different. And a lot of the businesses that fail, small-scale businesses, startups that fail, is because you find that the owners do not have a long-term mentality, so they don't have focus. In the morning, the guy tells you he's doing bread. He's selling bread. In the afternoon, you say, well, I'm a businessman. I'm doing so many things all at the same time. So in the afternoon, he's now doing a kabu kabu. In the evening, he tells you, well, I'm also. So people get distracted. So stay true and be focused. Be in it for the long term. If you don't do that, then you are planning to fail. And that is a major cause of failure of startups.
Thank you very much. That's a very, very exhaustive answer. I think you have covered everything from not having a business plan to not having experience to not having a mentor to not having access to finance, the right finance at the right time, to not having access to markets, to having poor corporate governance, to having bad financial statements and accounting, and to lacking focus. Thank you so much. So the next question I'd like to ask, when I ask other lenders and financiers, when somebody comes to you to access finance, what are you looking at? What do you consider to decide whether you give them money or not? Some of the things they mention are some of the things you are offering to provide for the borrower. For example, they mentioned a business plan, which you are offering to help them build. You mentioned strategy, which you're helping them craft. They mentioned access to markets, finance, some of the things you are helping them with. So if you're helping them provide most of the things that other financiers are looking to ask for, what are you looking for in a prospective customer that's coming to you for finance?
Well, if you're assessing a prospective client, you do so in a milieu of risk management, what we call risk management. Your mindset is that of a risk manager, because as we do know, businesses happen in an environment of risk. Risk is the probability, the chance that things will not go as planned. We all wake up in the morning, we plan to get somewhere, and then something can happen and you don't get there. Maybe, for example, traffic buildup stops you from getting there. You are coming out of your house, your car fails to start from getting there. So risk management is core to analyzing businesses and to business sources. And when people come to us, we evaluate that business with the mindset of a risk manager. We ask those questions that will enable us address the risks. You are right in saying that we take on risks, but we don't take on risks blindly. We assess the risk and evaluate the risk and decide which risks we want to take. So what are the critical risks that a lender or a financier or an investor will want to evaluate? Strategic risk. For me, I always start from the top. Strategic risk. Strategic risk covers, for example, what business are you in? Do you have a business plan? Do you have a long-term vision for that business? Is that business model tested? Of course, if the business model is not tested, like if you want to do business that no other person has done, it has a greater risk than a business that is tested. They say there's no reinventing the wheel. So if there's a business that is tested, we can borrow the model, we can steal the model, we can buy the model. But if it is not tested, we need to create it. And sometimes in creating the model, the risk element is increased significantly. So what business are you going into? Is it a business that is dying? If someone came to me today and says, give me money to be a photographer, I'll be thinking, photography is a dying business. Today, everybody who has a camera is a photographer. So what is it that you're going to do differently? Many years ago, as young people in the 70s and the 80s, we all knew about a company called Kodak. Where is Kodak today? So if you came to me to do a business that is dying or is in extinction mode, I will say no. If you came to me to do a business that I know has very limited opportunities for survival, from experience, 9 out of 10 who have gone into it have failed, then maybe I will be asking myself, why do I want to expose my money? So I'll be asking the question about the strategy. What is it you want to do? Long-term vision. What segment of the market do you want to play? What product are you going to deliver? What are the key success factors in that business? And then we now take it down to the operational level. How are you prepared Have you thought through the business? What level of experience do you have? Do you have track record of experience? Do you have a team? Again, in some businesses, you can be a lone man. You can go all by yourself. In some other businesses, I'll be asking myself, if this my partner, because if you come to me and I want to invest with you, you become my partner. If this my partner dies or suddenly is unable to continue, what happens to this business? So sometimes I'm looking for partnership, not partners. So sometimes I'm looking for people who have organized around a team. Do they have a team so that I can minimize the key man risk? If one person is not there, can the business continue? I'm looking at corporate governance issues. Have they set up a board? Do they have articles and memo of association? Have they registered? Or is it just two friends who are just looking for money? So the operational issues, I will have to ask questions. Then I will now go down to reputational issues. You know, this reputational risk is something that bankers will tell you is the most important. You know, when you talk to a banker, they'll tell you there are 5 C's of lending. The 5 C's are those things they consider before they give you money. I'm sure people have heard those 5 C's consistently. They talk about capacity. Do you have the capacity to do the business? Do you have the capital to do the business? Do you have the collateral? You know, if anything goes wrong, can I take something from you to cover the loss? And then the conditions for the business, and then finally the character. As they always say, character, I agree with them. I agree with bankers who say character is number one. In risk analysis, we call it reputational risk issues. So this person who is coming to me, what reputation does he have? Is he somebody who was dismissed from a bank for fraud? Is he somebody who has been known to forge certificates? Maybe, you know, these days people start forging from secondary school. I know somebody who is in secondary school, and somebody was telling me that he was taken by his parents, you know, shamingly, by his parents to what they call a miracle center. And in those miracle centers, people write exams for them. They pay mercenaries to write exams. So if I knew you were involved in that kind of shady business, then that tells me I can trust you, because business is built on trust. So are you reliable? Do you have a character? Do you have a known name? Do you have people around you? What kind of reputational risk will I be taking by associating with you? And then I will also ask myself questions surrounding the nature of the business. Is it a regulated business? We have what we call regulatory risk. You have to work with regulators on daily basis. You know, if you are in the business of banking or telecommunications or insurance or oil and gas, you have to worry a lot about regulators. So I'll be asking myself, is this business primed for sufficient regulatory compliance, or is it a business that the regulators can come and close down because we are not organized to respond to regulatory demands? So regulatory compliance is also an issue I will ask myself questions about before I invest. So overall, to tie up everything, when somebody presents himself before me as an entrepreneur, the issues of who he is important. The integrity of the person, the character of the person is important. And you know the character of the person sometimes by what the person has done in the past. You know the character of the person by who the person is associating with. Does he have a board? I can see if he's referred to me by somebody who has a name. I'll probably give it more consideration. Saw your name on the internet and I want to just get money from you. I'll ask more questions. But if he's being referred to me by someone I hold in high regards, then I'm likely to give him more consideration. So the person before me is important. The deal is important. I will ask all the relevant questions to ensure that the deal is something that will succeed. At the end of the day, we want to make money together. So is there a track record of that deal succeeding? Do we have evidence that his ideas are workable? People come sometimes with fantastic ideas. As the name suggests, ideas built in a dream world do not sometimes find sufficient footing, in reality. So I ask more questions where it is something that is novel, something that has not been tested. But there are people who come with the everyday ideas, things that have been tested. Perhaps the person is asking to be supported in an area where he has worked before. The decision making is faster, and the commitment is usually faster.
Thank you very much. So, for the sake of our viewers, in summary, you've said such a lot. Because you are well placed to help them with some of the basic rudimentary things that lenders and financiers ask for, your focus is on risk analysis. You want to be sure that they've handled strategic risk, reputational risk, regulatory risk, operational risk, financial risk, and any other risk, anything that can prevent them from achieving the objective that they have set out. You will look at it very, very closely before taking a decision. But the number one thing is the character, competence, and integrity of this person that is approaching you. So for our viewers out there, if you have character, you have competence, you have a good idea that is feasible, then you are a good candidate. So when you started answering the question, you said that in Nigeria, so many things are uncertain. And that is part of the definition of risk,
Yes.
uncertainty, the effect of uncertainty on our objectives. So in Nigeria today, what are the macroeconomic factors that support small and medium scale businesses? Is there anything that we are certain of that can actually be an opportunity and not a risk?
Well, you hit the nail on the head when you said that when you started by talking about the downsides. The environment in Nigeria is very harsh. I'll be the first to admit. You can't be sure you get electricity. I'm sure many of us in the last few months, we have to cope with maybe less than 5 hours of electricity a day. I know people who say they have 0 hours of electricity a day. Where I stay, we still get maybe 5 hours on the average. Some days we don't get, but if you average it out, maybe 5 hours a day. Today, the environment is harsh. Security, you can't plan to travel from one place to the other without worrying about security. The roads are not well done. Power is not regular. The macroeconomic environment is harsh. Inflationary issues. I know some of you must have seen. It came out as it me in a manner that was more salutary than just a joke. There was this joke. Well, I call it a joke, but there was this matter that went viral during the week where someone said one of the political parties is asking presidential candidates to bring 100 million. There is an indication of how things have gone in the past 7 or 8 years. That 7 or 8 years was about 20 million. It moved to 40, and now it's 100 million. So inflation, you can't plan in an inflation with an environment with hyperinflation, where you can't even, before you finish planning what to do, the costs have changed and all the rest of them. Of course, we have the lack of access to finances. So it's a very harsh environment. I would like to agree. But notwithstanding, I think there is a lot of opportunity to still thrive. And the major factor that you can't take away is the market size. The market size. Nigeria is big. We have the population. Anything you touch your hands on in Nigeria is money. Anything you decide to do is money. Whether you are a hairdresser or you are selling puff-puffs. Somebody cracked a joke that he was in traffic and he saw somebody selling a book, had to be a millionaire. He was wondering why the person has not even read the book himself, and he's in traffic selling it. So he knows he's going to find people who will buy it. Even if you decide to set up a church, you have adherents. So it's a big marketplace, and I think that should help to cancel out some of the limitations of the environment, which I have already enumerated. Secondly, there is availability of cheap labor. Even though you are an entrepreneur and you are starting up a business, a lot of the businesses are businesses you cannot do by yourself. You can't do everything all by yourself. You want to set up a bakery, you will need hands to help to carry things. You want to set up a pure water manufacturing business. And I talk about pure water because I've done pure water before. I'm not even going to call it bottled water. It was pure water, as a matter of fact. I did pure water business in Ikorodu in the early 2000s. Even though I went into it fortuitously, I had a property which I had more or less abandoned. And a friend of mine came and said, Mike, this property you have in Ikorodu, why don't we use it to do pure water business? And I said, okay, fine. And we set up, and at a point they had about 20 people working there, So I mentioned it because you need to also plan, if you're an entrepreneur, to work with people, to engage people. You can't do it all by yourself, Even when you decide to do a small scale business. I have another friend of mine who did a small scale business a few years ago where he was selling plantain chips. He had 2 younger brothers, or 3 of them, who had left secondary school, and they were waiting for jam, and they were in his house eating and feeding every day. And he said, guys, you can't just be eating and feeding without accountability, please. And he bought them frying pan and in his kitchen, and all they did was to buy what they call it, cutters and sealers and all that, and they were doing well. I remember at that time we were working in a firm where they were paying us at that time something like 400 or 500 naira a month, and then his younger brothers were bringing in another 400 or 500 naira from selling plantain chips. So at a point it was looking as if the work he was doing was the smaller business than the other one. But I mentioned this point because no matter how small the business is, you will need people. So in our environment today, labor is cheap. You can find people you can pay as little as 10,000, 20,000, and they're happy to work for you. And then the environment, has a lot of complementary businesses. Every business sometimes works in a value chain, So you might decide to, for example, produce starch. It's a small scale business, but you are supplying maybe Liver Brothers starch, or you're supplying Cadbury or whoever else is using starch to do some other thing. I have a friend who was doing, many years ago, he was doing palm oil trade, and it was rudimentary. All he was doing, he had a little capital. He was going to Akwa Ibom to buy, and then he stores in Lagos, and then when the market moves, he sells. And he was making more money from doing that than the little they were paying him as a professional in the firm he was working in. But you find that, for example, that business of distributing palm oil, you can be a retailer. You can be a collector of raw materials for the bigger companies. So the point I'm making is that there are a lot of corporates that are today looking for small-scale businesses that will work with them, that can serve as spokes, and they will be the hub in a value chain of businesses. And therefore, you should be thinking, what are those big corporates that I can support? And I can look at the small things they need. And there are small things they need, which could be things like manufacture of cleaning materials, provision of cleaning, small things that they can do. So you can look at businesses that complement the very big businesses. And there are so many businesses that are looking for such small-scale businesses that can complement them. And then finally, I think we can take availability of finance as a factor that supports business in Nigeria. There are a lot of banks today, commercial banks, development banks. I'm happy that the person who spoke before me came from one of the development banks. Development banks and every you find testimonies, stories of people who have been supported by those kind of development banks to start small and eventually grow big. So finance is available. I think what people complain about is the right type of finance. People also complain about access to those finances. And that is where people like us come in to help channel people who need those finances to institutions where they can get help and help them to access that finance. And then the final point I will make before I leave this point is there are new economy initiatives. When we look at opportunities for young people, they are opening up in areas that we refer to as new economy. New economy includes, for example, IT. 20 or 30 years ago, we didn't have GSM in Nigeria. Maybe 20 years ago, we didn't have GSM. So if you look at the number of people who have been employed today in telecoms, either selling recharge card or selling phones or selling chargers or selling the accessories and so forth, and those who repair phones, it's a big market. And it also applies to entertainment. Here about Nollywood. Nollywood is a big enterprise, and people are doing a lot in those places. So new economy, The new one today is the new one today is one they call fintech. Again, is young people who are just using their God-given brains to write applications, write softwares to solve everyday problems. And you'll be amazed at the everyday problems they're solving, whether it is queuing or it is calendaring or it is transferring money or it is buying. You know, these days I feel proud when I stop in rural areas and I want to pay for something and they say, okay, you can pay POS, there's POS. That tells you there are opportunities that are opening up in new areas. And if you remember when Nigeria's economy was resized during Okonjo-Iweala last time, most of the expansion in the size of the economy came from the new economy areas: IT, telecommunications, fintech, Nollywood, and so on and so forth. So these are areas young people can avert their mind to. And interestingly, today, with digital banking, with access to digital marketing, a lot of young people are, which shows that there is power in IT and they are harnessing it properly. So these are opportunities that are opening up, and I'm happy that we are getting improvements in the infrastructure that supports digital business and the digital economy. So young people should move into that space aggressively. One, because the entry barriers are fewer, are lower, and more importantly, because that is the future of the economy. Thank you.
Thank you so much. That's very encouraging. That gives us hope. So you're saying that, in fact, despite the uncertainties that we know about, there are opportunities. One being the large market, the large population of Nigeria, which is a large market. Another one being the low cost of labor in Nigeria, I mean, compared to other economies. Another one being the complementary businesses and value chains that you can plug into. Another one being the improvement in the infrastructure for the digital economy. And another one being the fact that we have a large population of young people who are technology savvy, who can plug into the fintech space and create businesses solving problems sitting on the back of existing fintech solutions that exist in the economy. So for our viewers out there, I think you should be very encouraged. It's not all doom. There is a lot of opportunity in the horizon if we know where to look and how to plug in. Thank you so much, Mr. Chukwu, for that insightful exposition of the opportunities that exist in Nigeria. And as we round up, I have a question from a viewer. And he says, in this country, Nigeria, can a beginner who knows nobody access finance to grow his business? If yes, he would like you to give one or two examples of people that have accessed finance that did not know anybody or did not have anybody backing them up.
Well, very easy for me to answer because I'm a living witness. I came into Lagos with my bag as a youth corper, and I didn't know anybody in the firm I worked. I believe that there are still opportunities. It's unfortunate that our national ethos has been substantially eroded to the point that young people are beginning to think that the only way to get things is to know people. Know people is important, yes, I won't deny that. But there are a lot of places to go to where they're looking for people who know something. Who knows something. And if you know something, I can assure you, people will come looking for you. And you'll find that all the miracle stories of people who have succeeded in fintech space, go and look at their stories. They're all young people who were nobodies. Look at the people who did Flutterwave. Look at the people who are doing the wonders in the IT space. They're young people who are nobodies. I'm saying this because I think today, if you have an idea, there are people who are ready to back you. There are many people who are ready to back you. But the only thing is, we have eroded our national ethos that people are not willing to work. People now think that the only way to succeed is to know people. You go to corporations, people want to be promoted even when they're not competent. People don't want to read. People don't want to. I just even told you that in some secondary schools, people don't even want to pass WAEC. They're paying people to write exams for them. They're paying people. So it's unfortunate. So I will encourage everybody to look out for opportunities for people who are looking for people who know something, not necessarily people who know people. If you have any good idea that you think is bankable, please call me. We'll find people who will back you. And I'm not saying me alone. I'm using me to describe other institutions. And there are people who are constantly looking out for stars, people who have ideas. Because like I mentioned to you, in 2008, when I went with Etolium, the two young people, at that time they were young, they are now in their 50s, Bola, Adeyinka, I can call their names, Peter, Emelogo. The two of them came to me. They had no money, they had no single cover, but they had ideas. And I knew they were willing to work. And we challenged the ideas. We interrogated them. I didn't just give them money. I knew one of them beforehand, yes, but it was the ideas they came and the conviction and the vision and the energy that convinced me. And I went with them to Abuja and I put money behind them. And then we got going. So there are people who are willing to support you. You have the ideas and you have the vision and you have the energy to do that. Good success comes out at the back of hard work. So I will encourage all of us to be ready to sweat it out. Don't be deceived. And some other thing I will say before I leave this topic is cast your mind back. All the millionaires you knew in Nigeria in the 1970s, where are their children? Cast your mind back. All the millionaires we knew in the 1980s, where are their children? The richest people today in Nigeria today are not people who are the children of those millionaires. They are mostly the self-made people, but they got help. They got help. So the help you need, you will get, but you'll be prepared so that when opportunity comes knocking, you are prepared to seize it.
Thank you so much for that answer. I asked our first guest speaker the same question, and you can access money from the Bank of Industry without knowing anybody. You can access money from Assetswise Capital without knowing anybody previously. And in fact, if you need somebody to take you somewhere, Mr. Mike Chukwu says you're the person he need. Once you know him, he will take you where you have to go. So Absolutely. You don't need to know them before. Just have an idea. You must have skills, something that people are willing to pay for, and you can make it in Nigeria despite the circumstances. In fact, to encourage all of us, the children of some of these rich people are nowhere to be found, even though they had access to all the people through their parents, and yet they were not able to succeed. So success is at your fingertips. Just work hard and be somebody who knows something. Thank you so much, Mr. Mike Chukwu. As we round up, if people need more information about private equity, venture capital, where can they get this information? Is there a link or an email address? Where do they write for more information about private equity and venture capital?
Well, what I'll do is I'll send you some links. There are about 2 or 3 links, the association, and then private materials which they can access. I'll send it to you so you can share it to participants on this program.
Okay, thank you, participants. You're blessed. We're going to receive information and resources that can be shared to you. So if you didn't register, please register so that when we share it, you'll receive it. Because if you just joined using the basic link, we won't have your information and you will not be able to get these resources. So please, Adama, put our website address, www.howtoaccessfinance.com, on the screen so that people who didn't register can register and be sure to receive the resources when Mr. Chukwu graciously shares them with us. Please, Adama, put that on the screen now. So thank you so much, Mr. Chukwu, for coming on this program, for giving such exhaustive answers, for answering all the questions, for giving our people hope as well as information. You've given them hope. You've made them understand that many things they think are not possible are actually possible. And you've shown them that people are happy to help if you know something and not just if you know somebody. So I'm sure that is very encouraging. That is very encouraging for the people. And if they have any questions outside of the information you are providing, they can send a mail to chukwumue@yahoo.com. That's chukwumue@yahoo.com. So thank you so much, Mr. Mike Chukwu. We hope that when we invite you again, you'll be gracious enough to honor our invitation. We have been privileged and honored to have you on our show today, and we've learned such a lot from you, and I'm sure the audience has been empowered. So thank you so much, and have a good rest of the day.
Thank you very much.
So thank you for listening. For those of you who have been with us since we started, we appreciate your time, we appreciate your presence, and we know you have learned a lot. So I understand that our next speaker, Mr. Chiagozie Nwizu, is in the backstage, and I will be bringing him on stage very soon. But before we do that, I want to read his exhaustive CV. I will try my best to give you as much background as I can. Mr. Chiagozie's CV is something that it will take a whole day for me to go through. So I'll put a brief summary on the screen So this is the CV of Mr. Chiagozie Nwizu. And he is the Managing Director of Franchise Business Development Services, a pioneer franchise development company in Nigeria, which is a member of International Franchise Association and Nigeria representative of World Franchise Associates. He is the Executive Director of Africa Franchise Institute and the pioneer president of Nigeria Franchise Association. Chiagozie is an international franchise development consultant who has contributed in a key capacity in the development of franchising in Nigeria. He sees franchising as a tool for building new roads to social enterprise and economic development in Nigeria. He is a widely sought after consultant on social and economic impact development programs and has both consulted for or worked with both foreign and government development agencies such as DFID, USAID, GIZ, the Bank of Industry, NEPC, NIPC, the Office of the Vice President of the Federal Republic of Nigeria on Economic Development, the Federal Ministry of Industry, Trade and Investment, the U.S. Commercial Services, the UK Department of Trade, the Spanish Embassy, and a whole lot of other organizations across sectors of the SME ecosystem. Under his years as a pioneer franchise consultant, he achieved so many firsts, including the following. He was responsible for bringing together thousands of stakeholders from across all segments of the MSME ecosystem to participate in or support franchise development in Nigeria. So without further ado, I will bring Mr. Uche, Mr. Chiagozie Nwizu on screen. Welcome, Mr. Chiagozie.
Hello, good afternoon, Rita. It's such a pleasure to be on this conversation. Thank you.
Thank you so much. It's a pleasure to have you. I sense a little bit of feedback. I don't know whether something is on over there other than...
I see. Okay. You want to check again now?
Yes. Thank you so much. So
it's better now.
Thank you. So your CV is so exhaustive. You have done such a lot. You've worked with so many multilateral institutions, and you've done so much for bringing franchising to the consciousness of Nigerians. So how can franchising help tackle the challenge of access to finance in Nigeria?
Okay, thank you very much. Franchising is a tool we believe is very useful for building new roads into enterprise, economic, and social development. It is a whole lot, it contributes a whole lot of opportunities beyond just entrepreneurs. And that's how powerful the franchise model is. So talking about how it helps access to funding, I'll just, just for the sake of introduction, although I would like to give a whole lot more better background to that as we proceed. Franchising is actually a tool for access to funding, and we want to use the word fundraising for both a business owner who is, using franchising as a model for expansion, as one of as a choice model, because there are other models of business expansion. There's also retail, distributorship and joint venture and all those other approaches that are there. So it supports that business owner who is a franchisor, who is expanding his brand, and also supports the individual or whatever investor, it could be a corporate investor who wants to buy the franchise, who is a franchisee. So why is it so? There is something about the franchise model, how systemic it is, how it brings a proven business model to the market, and it's a handshake that is between these two key parties who you keep hearing me in the course of this conversation making reference to: the business owner who wants to expand his business and the individual who is going into business for the first time, and is looking to leverage the business model that this other guy has built. So the good thing about the franchise model is that it has a lot of guarantees. It has a very low rate of business failure, in the way it is structured and the way it operates. So specifically now, how does it help the guy who is seeking business expansion? Take any of our brands that we have around, which already has dominated a particular location or territory, and maybe has expanded to a few other locations, and there is more demand to such a brand to expand to other territories within the country or even outside the country. Franchising supports such a business, because typically what happens is that the entrepreneur has a basic choice of organically growing his business. Growing the business organically means that he keeps plowing back his profit, right? So it might take for a business which has opportunity to expand to about, let's say, 14 states in Nigeria, it might take that business about 5-6 years to be able to build enough capital from its profit, and employing it back. So no entrepreneur that wants to grow wants to take that very approach. So the second thing is that entrepreneur will be looking for funds from the banks. And I've heard my other colleagues who had spoken on this same conversation, the likes of the Bank of Industry. We all know that it's like a very, it's steep. It is a funnel, right? And let me just put it this way: fund that banks can give are in short supply. I will just leave it at that. So, there is, and apart from that, there is this case of high interest rates. It might not be everybody might access a Bank of Industry kind of funding, So franchising, many of the models, you do not want to borrow money from the bank to expand. So you are dealing with the fact that you need to start paying interest rates pretty soon. And who are the people you are investing that very fund for them to manage? They are employees. Employees who, what stake do they have? The worst that can happen is that they lose their jobs, right? And then it is all over. Who pays for the fund you borrowed from the bank? Who bears that whole risk? It is you that borrowed the money. So that is why this franchise option for such entrepreneurs becomes very interesting, because essentially, if that entrepreneur, going back to what I said about a proven system, has built a proven system that can guarantee another party who has raised money. There are a lot of people out there, the statistics we have about number of startups that are registered with CAC every year. There are 64,000 of them every single year. So let's say as you are looking for money to expand to your new outlet, there are roughly about 64,000 other people. They might not have as much money. We might just take a dipstick and say, okay, maybe as many as 10% of these people have enough money as will be required to open a new outlet. So if you have a proven model, why not seek a way you could go into partnership with these people. They too want to get into business, right? And they can now become your partner to open that new outlet for your business to reach, wide and far, get into even territories where you do not even want to get into, territories where you don't even have any cultural experience and all whatnot for you to, or exposure for you to go and operate in that place. But this very individual, perhaps, has all of the, know-how. So what happens in conclusion to this is that that gives this business, this entrepreneur that wants to expand his brand, the opportunity to actually expand his brand in a very rapid way, in a very standardized way. He could actually achieve, I've seen, even in Nigeria, a number of brands that it had taken them 20 years to build maybe about 10 outlets. But the moment they start franchising, boom, in about 2-3 years, they are doing 30, 40 outlets. How is that possible? They are using other people's money in terms of partnership and then other people's time, because these are the twofold things that the franchisees bring. You have people who have the money 100%. You are not borrowing from the bank. They are not going to charge you any interest that the bank will charge you. The only thing is that you are not you own the rights and the brand and all of the goodwill. But your brand is expanding, and of course you are earning royalties and some other things I would like to go into in the course of this very conversation. So franchising, for the person, the big entrepreneur who is expanding his business, is globally most proven business expansion model. It is incredible. You see brands in the US like that have about 20,000 locations. Out of those 20,000 locations in the US, they don't even have more than 500 locations. And all these other locations are different parts of the world. And the business is expanding, it's making impact, and they are making money. Then on the side of the franchisee who is making an investment, the very interesting thing is that even those who have spoken before I came on board would agree that they would rather lend money to a startup who is leveraging a business plan or a proven model of an already established business. There is no bank. I have a background in banking. I worked in the bank, and I can assure you that more than 80% of the loans that the banks refuse to honor, refuse to grant, are coming from people who they believe they are risk. It is risky to lend to them. Bulk of these people are startups because they do not have a track record, because they are not trusted that if they are given money, if they are given loan, that they are going to be able to return the money. But I can tell you that banks do lend by extension, to startups. Why? Because this startup is a franchisee of a Mr. Biggs. It is not only that a typical Mr. Biggs, I'm just using Mr. Biggs as an example because he's the most familiar franchise in Nigeria. But this individual is leveraging a proven model. So it's literally this franchisor. It could be Slot, it could be Cleaners, it could be House of Tara, it could be Oriki. All these brands are local brands that are franchised in Nigeria. He's leveraging that particular model. There's a sub-guarantee that is provided by the guarantor for this franchisee who might need this capital, by the way, to augment what he has for him to start up a business. So we've developed a number of franchise models like that, where perhaps it costs about 40 million naira to start up a franchise, and the franchisor has a model that says, if you have 20 million naira, I can talk to my bankers, and they can give you additional 20 million naira, which might finance the stock, finance the inventory, and I will provide a guarantee, because it's more like I'm opening yet another outlet, So I think I've given an extensive response to this very particular question, but I believe that, as we proceed further, I'll be able to add more details to that for people to understand, to get the story better.
Thank you so much for that very exhaustive answer. I'm sure our viewers have been enlightened about the benefits of franchising. One of them is you don't have interest to pay, and then it's not your money that's at risk. I think the benefits far outweigh any risk that they may be. So I would like to ask, is there any risk associated with franchising?
Okay, so there's no business that doesn't have risks that is associated to it, but I will build on what I had said earlier. One interesting thing about the franchise model that makes it unique from any other business model is because it operates a proven system. It is a most structured. It leverages structures. It leverages a business system. So when I talk about business systems now, I'm talking about that the way to operate a particular business, which has been in operation over years, right, has been proven. There has been an assessment of all of the systems. Let's say it's system of business development, system of hiring the right employee. Every business has a right fit of employees, and you don't prove it when you start the business. It takes time for you to learn. It's like learning the ropes. There are peaks and valleys that every single established business that you see has gone through. So it comes to a point where they say, we have proven how to run this business right. We have proven how to manage our inventory. We have proven how to reduce theft to the barest minimum. We have proven how to, even the very interesting thing even about the franchise model is that the franchisor is empowered by this model to take charge of the entire value chain. The franchise model that the franchisor designs brings him in control of even suppliers, people that supply him whatever raw material that, and sometimes it could be a reverse in the agri space. There are franchisees that, for example, are into commodity aggregation. So they source commodity and they export it to powerful foreign organizations in Europe, in Africa, in China, and everywhere. So because of how the franchise model empowers them, for them, they are in control of the results that they deliver. Okay, there is a guarantee of value to every single stakeholder in that very model, right? Because in the design of the franchise model, you look at employees, you look at the consumers, you look at the partner who is a franchisee, right, who needed to own the new outlet that is being opened. You look at the entire value stakeholders in that value chain, and you design how you will see that all of their interests are satisfied. So every single entrepreneur we have supported instead of a franchise model, they realize that this is a major upgrade. So if I might give you a little bit of an example, a food business that is into, operates a restaurant, right? And he needed to negotiate the source of, let's say, eggs that he requires, right? For, let me say chicken. Chicken is the one that is very, and this guy currently operates only about 3 or 4 outlets. Now his bargaining power increases the moment he expands from those 3 or 4 outlets to 20 outlets. You realize that the people that are supplying him these very products, they begin to take him more seriously, right? He begins to even influence things like credit. This time around, I want to pay you after 30 days or pay you in whatever way. I believe that this point has been made. So the franchise model empowers the franchisor to take complete control. Even the customers, the people that like walk into the restaurant, it totally develops a model that ensures that there is standardization of taste, of value, of service, of every single thing. So what happens is that it reduces the risk that is there, whether it is now out of these 2 primary stakeholders I'll keep referring to, the franchisor or the franchisee. So the franchisor, the risk is reduced for him because he's operating a business that does not depend on only him. If you compare him to when he was a one-man show business, he used to be he would be overwhelmed. He probably did not have standard operating procedures. He didn't have structures. Things are pretty much revolved around him, right? There's a lot of micromanaging that he needed to do. The moment he sets up a franchise model, this whole thing will change. The system, it becomes an entity which is running at the minimum 90% on systems. Technology comes in, business automation comes in, standardization would come in, thorough training and onboarding. I had a chat, an interview with the CEO of, and it's to their credit, so I don't mind saying it, the CEO of Domino Pizza. And he says that when they hire people for 2 months, these guys are in training. For 2 months, they are undergoing training, first of all, at the central kitchen or whatever. And then they come to the outlets. They are not doing anything, just beyond the supervision. They're watching how we are making the pizza, how we are doing it for 2 whole months. So these are part of the system we are talking about. It guarantees that when the people that are hired come on board, they're able to deliver, they're able to execute very well. So there is a lot of what's the word now? Of proven expectation, certainty of what result, the chance of the business failing and going under the weather or being affected by so many factors out there in the economy of inflationary business is reduced. On the other side, again, of the franchisee, in fact, the franchisee is the champion in the value of when we are talking about risk. So because the high rate of business failure in Nigeria, 85% of startup businesses fail in Nigeria. So many startups, many entrepreneurs who want to go into business want to avoid that risk of going into an unknown territory, try to prove a business plan. The challenge with doing business in Nigeria today, how tough it is. So for them, they don't mind any brand that is proven, that they can leverage any system. There's a hand-holding. Yeah, even when you are buying a franchise, the franchisee tells you all of our outlets, they make so amount of revenue in month 1, month 2, month 3, year 1, year 2. There is something you are looking forward to. It is not only the system and the brand and model that is delivering it. Part of what is delivering it is that they are going to handhold you. They help you hire your employees. They help you train them. They send a manager who sits with you maybe for about 6 months to handhold that very business. So the risk is very, very minimal. Now, talking about what risk there might be there, when COVID happened, COVID also affected franchises. There's not much you can do about that. Then there are also situations where, it is a factor of the individual who is in the game, vice versa. If it is a franchise that is not well developed, really, you might find a franchisor who doesn't give sufficient help or doesn't know what is his or their responsibility for supporting a franchisee is. If they don't play that role, where some of our old generation franchises in Nigeria had, that's a mistake they had made. Yes, the franchisee might get into a risk of investing in a business that does not deliver. There might also be a risk of hiring or going into partnerships in marriage with a franchisee who is not well profiled. For example, going into a franchise relationship with a politician. So definitely that franchisor will get his fingers burnt, right? So that will be that.
Thank you so much. In fact, you have preempted the question I was going to ask next, because you have described the franchising process and all the training involved, which makes it less likely that the franchisee will fail. But you have brought out the risk, which is that the franchisor may not provide the support that's required, and that may make the franchisee not do well. So there is a very minor risk, but by and large, most of the risks are taken care of by the systems that have been built and the franchise model itself, which emphasizes empowerment, training, and handholding. So thank you very much for that answer. So what is the typical profile of a company that is ready for franchising?
Say that again.
What is the typical profile of a company that is ready for franchising? Because not all companies will be franchise ready.
Okay, I'll give you this answer in 2 folds. There are actually sort of 2 answers to that. And to the entrepreneur out there watching this who is looking to franchise, I want you to listen to what I have to say. There is the profiling in terms of how do I know as a business that want to franchise that my business is franchise ready? Is it the right timing for me to franchise my business? There's a profiling of how do I know that my business model is franchisable?
It looks like we have a little bit of a connectivity problem. Our guest seems to, his internet connection seems to be frozen. So while we sort that out, I think I will give us a little bit of an interlude while our backstage tries to find out what problem Mr. Chiagozie Nwizu is having with his internet connection. So we're still here and we're still in our broadcast. We'll just take a few minutes while we wait for Mr. Chiagozie to come back. So for those of us who are in the audience watching, if you have any questions so far based on what Mr. Chiagozie Nwizu has said, please use the chat function on the platform where you are, because we'll be able to see it and take it here. So we'll just use this opportunity to take questions from the audience while we wait for Mr. Chiagozie Nwizu to reconnect and join us. And while we take those questions, we will just remind you about the program and what you are watching currently. So we will I think Mr. Chiagozie is back. Let's add him back to the stream. Welcome back from that short intermission.
Thank you so much. In fact, what just happened is part of the system thing we are talking about, you know. So power happened at my location, so I had to switch to my secondary internet. So apologies for that. All right. Okay, so you know, back to what I was saying. Yeah, definitely, it is that is part of what the franchise model brings on board. You know, I don't know if I've answered that question exhaustively.
Yes, you have. So the next question I was about to ask is the typical profile of a company that's ready for franchising. You said there are two angles to the answer. There's the angle of yes.
Absolutely. So I said the first is to ask the question to say, is my business ready for franchising? Has it grown enough? I will give some points on what to look out for. And then the other one is my business model franchisable? So now on the first, a business must not go into franchising until it has what is most important is a business model that has been proven. How do you prove a business model? A proven business model is one that has, has already dominated at least each local market. It's been able to dominate a local market. What do I mean? The business started somewhere at Ikeja and has been able to replicate the model to some other place, maybe in Lagos. And what is it trying to prove? It's trying to prove that the business can operate, detached from the business can operate detached from the owner of the business, right? So it means that it is not because the owner of the business is micromanaging the business that business is able to deliver results, you know. Please, if you don't mind, just give me a second. I need to just switch to back to the primary internet. Can I do that? Just
yes,
for
thank
a second.
you so much.
All right.
We'll take a short intermission while you do that. Thank you.
Okay, thank you very much. And I really apologize for the break in transmission. All right, for the power failure. All right, so now, like I was saying, this entrepreneur would have to have proven that it is not by the system is that the business does not depend all on him. He does not successfully run that particular outlet by micromanaging, which is what typical challenge you have among startups and growing businesses. That there are a team who have been trained, who understand what their roles are. They have a standard operating procedure that they are following, that they have been able to understand their market, their products have been proven in the market. Okay, so there has been demand also beyond the immediate location. And then you begin to see customers who are chatting on social media, asking, when can you bring this, your service or your product, closer to us, right? So these are the basic things. The other things to look out for should be the quality of the management. I see a number of businesses, in fact, out of our experience, trying to support businesses in one of franchise, we see some businesses that are built around so much the owner of the business, and this owner of the business is a thoroughly trained entrepreneur, has all the certifications, but when you look at the team, you don't see a strong team. Now, meanwhile, this franchise business is supposed to provide support to a network of new outlets, more outlets, and there's going to be more demand on the management team. So you need probably strong finance team, strong business development team, strong marketing team who are going beyond marketing just the products to marketing investors who are able to do a proposition, to some other individuals who would have put their money in stock or would have, built some property and leased it out, to tell them, see, our proposition does not only make you more money, maybe that is even the one that is more suitable to you so that you can run your business, and these are ways we are going to support you. So the quality of team is something to really put into consideration. Then there's also the need to see that the products, have a wide range of appeal. What about, there are some products that will not, even within Nigeria, there are some parts of the country where such a product will not have an appeal, right? So if that brand cannot expand beyond the culture, maybe it has some cultural limitations around the products and the proposition and all of that, it's not very likely, except there's going to be a need to do a tweak on that. Then on the side of identifying to say, is my business model franchisable? A business model that is franchisable is largely a business that is reliable, that relies a lot on service standards. If it's only about moving products and services, perhaps that's the reason why Dangote has stuck to his distributorship that he knows about. What does it take to move cement from one place to the other? But the moment the part of the value proposition to the customers will depend on services, that is why you see a lot of restaurant businesses. If you see retail businesses, probably retail businesses that are in the telecom sector, where they are not only selling phones, but there are services that are involved, So, it's some business that is retail in nature. It is in the hospitality space, which is largely service, service-based business that should, that has the highest chance of being franchised. However, I can assure you that there is no limit to the type of, in terms of sector. I've not seen any sector really that doesn't have a franchise in it yet. So I fondly talk about an exhibition I attended in South Africa. And one of the brands I met at the exhibition was a funeral services franchise brand, already operating in 5 countries with so many locations. I think they had something close to 100 locations as at then, So who would have believed that funeral services is franchisable? In Nigeria, insurance firms, they operate franchises. Leadway Assurance and AXA Mansard, they are operating franchise models, So it is very critical that the owner of the business does these assessments to be sure that there is that demand, there's appeal, there's a strong brand goodwill that has been built, right? Because if you opened that new outlet somewhere in Kano, Would there be people in Kano that will say, oh, I know about this very brand. I used to see it in the media. When I visit Lagos, I used to see it around. That brand goodwill is part of what is going to make it to hit the ground running. There will be initial appeal, customer base appeal, and all of that. So the last thing I'll talk about is see what I've said. Any business that is looking to franchise must be certain that it has some system that is going to hand over, because we're talking about knowledge transfer. So that franchisee would need something you are going to hand over to him, how you are going to teach him, how you are going to onboard him, how you are going to train him and support him for him to operate that business independently with very minimal support, maybe remote support with technology, and the business will still deliver exact same result it has delivered at the locations that are owned by the franchisor. There are a couple of other things, but just for time, I'll leave it at here.
Thank you so much. So for our viewers, in summary, there are two things to look at to recognize whether you're ready to franchise. One is the model. Is your business model franchisable? And he has identified service-based businesses, especially in the hospitality sector, as being prime targets for franchising. Secondly, even if you are in the right business model, you need to ask yourself, is your business ready? And your business can only be ready when that business can run without you having to micromanage. So thank you so much for that insight into recognizing when it's right to franchise. The next question I want to ask, given all the benefits that we can see associated with franchising, why is franchising not so popular in Nigeria?
Okay, so interestingly, a lot has been going on in the Nigerian franchise industry. I would agree that as a country, the distributorship model, which is actually a form of franchise, because the franchise model has what we call the product format franchise. According to that, is we are to go according to the theories and the books. Yeah, there's a product format franchise, which is largely about distributorship, but we are talking about the business format franchise. There's also the licensing, which applies mostly to manufacturing and the technology space and all whatnot. So now, but yeah, in Nigeria, it's a thing of what in the number of businesses that have been operating as franchising over the years. We could have actually, the franchise model could have been much more popular, but I would say that from our findings over the years, the biggest challenge that the franchise industry suffered was that of not having key industry, pillars that would help the franchise industry to grow and, to be very well established. One key pillar is that of knowledge. There was a major knowledge gap, and, some people, the old generation franchisees, some of them were very well structured businesses, but they did not, after they set up the franchise, which of course foreigners brought into the country, there was no sustainability, right? By seeing that there's proper training, education, knowledge transfer to sustain the success of those brands. So without mentioning names, there are some, brands that Nigerians would always make reference to and say, oh, that this very brand, I know about them, they didn't do so well as a franchise. But if you go to other countries, you don't see anywhere you do not find a franchise institute that provides training. You don't go to any other country where you don't see a strong franchise association, which is a business member organization that ensures that there's an aggregated support to see that franchising grows. So it's been something that literally our organization in the modern franchise industry that we have reverted today has taken a pioneer role in bringing stakeholders together. I think you have participated in one of the events we have done in the past, where we are trying to educate, we are trying to train, we are trying to create awareness. There is hardly any government support. If you go to South Africa today, there's what they call the micro franchise model. that is the biggest thing happening to the South African micro and small scale business space. The micro franchise model, the Ministry of Industry and Trade and their own CBN is providing support to identify micro businesses, because that is where majority of the people who want to go into business, that is where the size of business they can afford to set up. So it's not a franchise we are doing here in Nigeria, and it is the big franchise. Go and try and see the Burger King that entered into Nigeria the other day. How much it's going to cost you to bring in a Burger King? I can assure you that you are looking at something probably in excess of ₦1 billion for you to take up a master franchise of Burger King. Even to set up one outlet alone, I can assure you are looking at something in excess of ₦500 million. Right? So how many Nigerians are going to be able to afford this? So now, back to what I'm saying, there has been a major gap in know-how, in knowledge. So these are part of what we've been trying to relate with our friends in the public sector, in the Ministry of Trade and Investment, the policymakers and enablers, to see how we could create still, like we were saying today, access to funding to franchises like we have in other countries, where a typical bank of industry will be able to create a specific fund that is for franchise businesses, because the franchise business model is proven. It has very limited rate of failure. So in a situation where such an interesting, proven business model that has a lot to offer and has been proven all over the world, both in developed economies, and has even given much more value to upcoming and developing economies, where we are, we do not give such an industry support. You can tell that it's going to take us quite a number of years for us to be able to catch up, right? So it is sincerely something that we are hoping that as we've been doing in the space today, we have the Africa Franchise Institute. Anybody watching this can look up Africa Franchise Institute, which I'm the executive director, and we really appreciate the support of DFID towards setting up that very organization. And there's a lot of support being provided by Faith Foundation and the Enterprise Development Center, so that there will be training for both the franchisor, for the franchisee, for the other vendor and service provider stakeholders. A bank that has to provide funding to franchises need a training. A law firm, yes, I tell you, in Nigeria, that wants to provide legal services to franchises need to understand, take a training, understand the model and their legal needs to be able to offer them services. Branding firms, consulting firms, insurance firms, there are a whole pack of service providers to this interesting industry. In Nigeria, that very training is lacking, right? So the foundational thing is that very lack of awareness. A couple of Nigerians say, oh, I want to run my own business. I don't want to help another man to succeed. It is also a knowledge gap, because we did this study that was sponsored by DFID, right? Which we had a very interesting study. We benchmarked 5 countries: South Africa, India, UAE, US, and the UK. We benchmarked these countries to see how they've been able to grow, and we found out truly that that people are very willing to collaborate. It is just because of the fear, the attitude of Nigerians thinking I might not be able to find a good partner. I, as a franchisor, might not be able to find a suitable franchisee partner. Why? Because the guy does not know that there is a solid legal requirement, which even helps him to profile his franchisee, do due diligence, very well, that he wouldn't need to end up in the court fighting, with either the franchisor or the franchisee, because there are alternative dispute resolution approaches that have been established. All these things I'm telling you are not common knowledge among Nigerians, right? As I'm talking about the system that helps to establish a franchise, many people do not know that there's a thorough system if you set up a franchise model that helps you to identify the right people, the right partners, that helps to make the relationship a win-win. There is no banker tomorrow who is looking for a plan B business he would own, and he wants to go into makeup business, and he wants to partner with House of Chara that will go and be rubbing shoulder with House of Chara and be giving troubles. once this particular entrepreneur realizes that he is in safe hands, right? That this is a proven business, that he is going to get all of the support. He definitely does not have the know-how to run the business. What makes a typical franchisee to get into the fight that usually happens is because the franchisor does not know his responsibilities, does not have the capacity to provide support. Things have already gone wrong, and the guy is saying, I made an investment and I'm not seeing value. Then this whole thing begins to happen. So it is a knowledge gap. It is foundational to whether people are misunderstanding whether I'm supporting another man's business or whatnot. We really need to, which is what part of what this very conversation is helping to educate Nigerians on the values of franchising, on the opportunities, on how structured it is, and the processes of getting into it, and getting good, making good opportunity of what it has to offer.
Thank you so much. So in summary, franchising hasn't really grown in Nigeria because of the absence of the support systems, a training, an institute that trains people on franchising, and then an association where people who are into franchising can aggregate and get support for each other. But you are pioneering some of this support in the space, and I think that's why franchising is taking off now. You mentioned 3 different types of franchise models, or let me put it that way. Which one prior to now has been most popular? The product franchise, the business system franchise, or the licensing?
Okay, so in Nigeria, as we know, the distributorship, which is the product format franchising, is the one that is most popular. It's just that we do not know that according to how the industry is structured, that it is called the product format franchise. But globally, of course, it is the business format franchise. So the difference between the distributorship and the business format franchise, which we've been talking about, is that the business format franchise does not only provide a turnkey solution, a set of systems and processes of how to get into the business, set up the business, launch it, run it, and operate it successfully. The franchisor there's a commitment between the franchisor and the franchisee to see that the standards are followed. So the franchisor has a responsibility to provide oversight, to watch out for the business, to monitor it, not just for the purpose of controlling the franchisee. That is not the purpose. It is for the purpose of transferring the knowledge that he has proven, to handhold, right, to incubate, I may have to use those words, to see that this new business succeeds for the interest of the 2 parties. If it succeeds, he has protected his brand from being known as a failure. If it succeeds for the franchisee, he has been able to make an investment that that he has been able to deliver on the expectation. So globally, when you talk about in real estate, in food, in retail, in a cafe, any kind of, most of the brands that have outlets across the world in so many multiple thousands, 40,000, 60,000 outlets, they are franchises, and you wouldn't see any other business model that is able to deliver this number in terms of expansion.
Thank you so much for that enlightenment. So Nigerians have been franchising. They didn't know that distributorship is a product format franchise, but the business system franchise is like a product format plus, because it's in addition,
I like that.
we have business systems. Thank you.
Yes.
So thank you so much. What are the key success factors for a successful franchise in Nigeria?
Okay, so for a franchise to succeed in Nigeria, I will just layer it this way. Again, I'll keep talking about these 2 because I don't know who is watching this. So once, whether you are someone looking to buy a franchise watching this, or you are a business owner who is wondering which model will I leverage to expand, I'll be speaking from both ends as much as I can, so that both categories of viewers will be able to get value. So to make a success of the key success factors for a franchisor, I'll just put it on one thing. You do not go into franchising without working with experts, right? Experts like franchise business development services. I'll put it this way. So we've had some brands that we have spoken to. It took about 4, 5, some of them 6 years for them to make up their minds. In fact, one of them, it was because the brand got into franchising, assuming it was just more like an advanced distributorship business. The contract was done by a law firm that wasn't knowledgeable of drafting a proper franchise contract. So many of the things that are in the system we are missing, right? The standard operating procedure was just drafted. It wasn't anything significant. The franchisor didn't know, according to the franchise model, because in the franchise model, remember, you are making the franchisee a guaranteed promise. You are saying, so that it doesn't become a monkey the walk, baboon the chop. We use your money, and you open another outlet, and our brand is growing in terms of expansion, but the franchisee is not running a profitable business. He's struggling. He didn't go into that business knowing how to run that business, and he's struggling. So that was a bit more what the case was like. And the particular business got the fingers burnt, and 6 years later, we had to work together. We were happy that we were able to add value, and that brand has been able to evolve and is really rapidly expanding today. So what I would say as a key success factor is work with experts that will help you to review your brand and develop a good franchise model. And I'll just leave it at that. For the investor, whether corporate investor or individual who has found the franchise space interesting and wants to go into franchising, I would encourage you to do your study very well. There's some resource we are providing, which I believe will be made available to everyone here. On our blog, we have a lot of content that we've written that would educate people on how to do due diligence. You simply need to do a due diligence. You need to assess yourself and say, what do I like doing? Do I like something that brings me to interact with people? Are you a salesman? Are you a back office person who likes to do numbers, like work on engineering or accounting and all of that? How much money do you have? There's a profiling, right? So many factors that need to be put into consideration. So you need to understand your capabilities, understand how much money that you have to invest, understand what you are able to do and what you're not able to do, and then you study every franchise business you are looking at investing in. I can give you some free tips. Make sure that they give you what we call a franchise prospectus document. The franchise prospectus document, you look at it, it helps you to understand everything, the support you will get, the responsibilities that are demanded of you, even the business model, to see whether you really would like to work in this type of business, because you are going to be the operator of the business. There are very few franchise models that are not owner-operator based, where you will have to be a little bit passive. But I can tell you that more than 90% of franchise models you will find will require you to fold your sleeves and run the business in line with the systems that have been handed over by the franchisor. So we run webinars from time to time, which also you can look out for on our YouTube pages, where we've done a lot of engagements and explain to people on how they can assess to identify a suitable franchise. We could also provide consultancy service, but we rarely, that is rarely in need, because we really believe in educating Nigerians on how they can do it by themselves. But where perhaps this investor is a corporate investor, or maybe is a passive investor who is looking to set up this thing for where we can provide further support beyond all this other information that we have out there.
Thank you so much. So to summarize, if you want to be successful in franchising in Nigeria, you need to get help from people who know about it. You need support from the experts. And
Absolutely.
FBDS, being the pioneer franchise specialists in Nigeria. They're the best people to give you that support. So even if you're approaching a lawyer, you need to be sure that it's a lawyer that knows about franchising. So if you need recommendations, FBDS can give you that. So we have a banner on the screen right now showing you where you can find extra free resources about franchising. Most of the social media handles are at FBDS Nigeria. So you can visit them on Instagram, Facebook, Twitter, YouTube, etc. for more information, to make sure that when you go into franchising, you do it successfully, because knowledge is power and people fail for lack of knowledge. Thank you so much. So going on to the next question, I would like to ask, listening to you, it looks as if there are no costs associated with franchising. But being an accountant myself, I can see some places where I can see associated costs. So can you tell us, are there any costs associated with franchising? And if so, for the franchisor, for the franchisor, not the franchisee, what are those costs?
Okay, so the costs they are in phases. There is the franchise development cost to develop the franchise model, right, and launching it. Then there are other costs, which are costs that helps to keep the standardization. The franchise development costs are essentially, just some consulting activities which helps to review the business model. There are what we call criteria that would have to be looked at, checklist of a number of things that a business would have to see that it has before it goes into franchising. So essentially, it is to do all that very detailed assessment, which takes quite a while, identify what the gaps are, and then take time to close the gaps. For some businesses, closing that very gap might have other associated gaps, associated costs, which is where, like you said, you may need to involve getting some experts to put their books in place, to see that there is it was closing the gap, maybe to deploy some technology that is going to be helping to automate the operation of the business at all the locations, and helping the head office to have an oversight function and support. So when these gaps have been identified and they've been closed, means that the business can now say, we are very ready. We've optimized our business. We have built the capacity. We have all that is required. We have the right team. We have technology. We have the capacity to distribute, provide support, engage, as what is depending on what business it is. The business now launches a franchise. When it has launched a franchise, then it will now have these other standard costs that are associated in supporting that business, a little bit outside the scope of the operation of the business. So we talk about things like insurance, right? Every franchise business that is well set up would have to have insurance. Insurance of whether it's the goods that are in stock, insurance of products that are on transit, moving from the franchisor or wherever to the outlet, and different other kinds of insurance, again, depending on the type of business that is. A franchise business maintains contact with service providers, law firms that keep providing support, maintains contact with bankers. You need to have your bankers that, beyond the accounting team, who really will keep giving advisory to the business. There are other, like branding, because of the essence of standardization. The look and feel of the business will always be the same. So there's a maintenance of these partners, service providing partners, to whom some of these services are outsourced, and they need to keep supporting the business. There's mystery shopping, which is also ongoing every now and then, to see all these things are to see that the business is protected, that standards are maintained. I hope that answers the question.
Yes, thank you very much. That answers the question. So what we understand from this is that the costs come in phases. First of all, as you're preparing for franchising, there are costs associated with consultants, legal advisors, training for yourself. And then when you now launch the franchise, there are ongoing maintenance costs associated with supporting your franchisee. And these will include business development and marketing costs, branding, legal costs, let me call them monitoring and evaluation costs, whether they're the cost of sending mystery shoppers to make sure that the brand is maintained. So there are some costs associated with franchising. It's not totally cost-free. So I'd like to ask my next question. Knowing what costs are associated with franchising, if we compare franchising with borrowing and with private equity, which is cheaper?
Okay, so the interesting thing is that we've had some clients that we had in the process of pre-qualifying the business to get a franchise ready. We advised that they might have to use their own funds or equity-based fund to expand the business a little bit more before they begin to franchise out. In many cases, those are also businesses that require, that are capital intensive in terms of providing the support pillars. For example, a business that relies heavily on logistics might need to get funding to procure certain assets, maybe vehicles or some equipment. There are some of them that needed money to invest in technology. There's a particular one we developed, and they needed to invest heavily in technology to help to automate the operation of the business, not just the typical ERP kind of stuff. So looking at that, they needed to look for private equity funding to build the right capacity to be ready to support the network of the franchises. For some of them, it's also a kind of businesses that in their nature, right, especially when you see some pioneer franchise models, they needed to beyond 2-3 locations that they have to open more locations, use maybe PE funds to do that. But the point is that, like I said, the reason why businesses want to franchise is not just for them to access funding. It is to take care of that key man risk. When you deal with key man risk, if you get fund from, if it's a PE fund that you got, you still have to rely on employees. Yeah, there are good and reliable employees, but definitely they are in very short supply. So you want to set up a business at a location where you cannot know what is happening there. We've heard stories of things that happen in this country. You will be seeing activities where the whole business is gone. Products are gone. Customers, different things, do go wrong because of issues of interest, where people have a stake in the business. So that business will still come to a point where it has expanded so much with investments, with equity funds or whatever borrowing, that they want to franchise the business so that they are able to expand further, even beyond the local territory to other regions. So I would say that they are actually complementary, depending on really how far and wide a business wants to go. This does not write off. So, I'm putting a caveat. It does not mean that there are no businesses that are using PE funds to do so many locations. Perhaps it works for that very model. And that's why, again, I say that any business that is going into franchising should have it should consider the quality of its management, right? So for a business that has solid management and pretty much structured, has high quality people, to be very frank, they have a better chance of expanding and managing the business more than that business that all the effort and the knowledge is resting on just one entrepreneur who does not have very well-educated and a good quality, team among the management team.
Thank you very much for that answer. So if I'm to summarize, basically you are saying that private equity, borrowing, and franchising are complementary. So you don't want to compare the costs. And you have now also brought out the fact that in addition to finance costs, that an important cost consideration is the cost of not having good people to run your business, which is unquantifiable. And you are saying to us that the franchise solution does not only provide money, it gives you employees who you can trust because they are working for themselves. Because really,
No, they are partners. I choose to call them partners.
okay, thank you for correcting that.
Because this employee thing is why Nigerians are running away from franchising, thinking that when they are franchisee that they are an employee. So they are partners and they own their own business.
So you have partners who own their own business and are invested in their own business and are there for the long term. And that makes it a more sustainable, lower risk model of doing business. So thank you very much for that insightful answer to the question. So, and you also said that it's not either or. So at different stages of your business, you may need some access to some of those other types of finance. You may actually need PE finance to do certain things to get you ready for franchising. So thank you so much for that answer. So I think we have exceeded our time for this program today, but nobody minded because we've been having such an interesting time and we've been learning a lot. So as I round up, I think I will put it back on the board so you see. If you need more information about franchising, please visit any of their social media handles. FBDS is the pioneer franchise consultant and franchise specialist in Nigeria. And in fact, they are providing some of the support that government should provide that is absent, which is providing an institute and providing an association where people can gather and learn from each other. So please visit their social media handles at FBDS Nigeria on Instagram, Facebook, YouTube, and Twitter. So thank you so much, Mr. Chiagozie Nwizu, for sparing the time to honor our invitation and for providing so much information about this new area, this new source of finance in Nigeria, which is franchising. And we hope that if we invite you again, that you will still grant us that request and come to answer more questions about franchising so that we can help together educate Nigerians about franchising and that model of raising finance for growing and expanding your business. Thank you so much, sir. It's been a pleasure having you, and have a great rest of today.
Thank you so much. It's my pleasure being on this conversation. I really appreciate the opportunity. And to the viewers, thank you for watching, and do have a nice day.
Thank you so much. Thank you. So, viewers and those of us who may be watching the replay later, we thank you for your time and your patience, and we know that you have learned a lot. If you need more information about franchising, we have been putting that on the board. If you need more information about BOI's products and services, send mail to info@clementashleyconsulting.org. Clement Ashley Consulting is an approved BDSP of the Bank of Industry, and we are committed to helping build capacity of SMEs and other borrowers in Nigeria. And we can also help borrowers package their loans to make sure that they pass the scrutiny of the Bank of Industry. So we thank you so much for being here today. I'm sure you have learned a lot. We've talked to 3 different types of financiers. We've talked to a development finance institution that gives regular loans. We've talked to a private equity and venture capitalist that can handhold you and give you PE, private equity, as well as venture capital. And we've just spoken to Mr. Chiagozie Nwizu, who can help you expand your business, raising finance using the franchise model. He won't just help you raise finance, he'll help you build your business to be franchisable. And he'll help you put the systems in place that will make sure that your franchise is a success, and as well as provide the resources that you need, because not everybody is geared to serve franchisees and franchisors, except they have been properly trained. So thank you very much for being with us till the end of this program. We appreciate you very much. And if you join with the general link and you haven't registered for the program, we won't have your email address, and you may not be able to receive our follow-up information. So if that's with www.howtoaccessfinance.com so that we have your email address and you'll be able to receive follow-up information from us, as well as know when the next conference is coming up. So thank you so much, everyone, and have a beautiful day.